All right, everything looking good. Let's go ahead and get it started. Welcome back to the channel, Crypto Trend Trader, with our Wednesday midweek market update. Before we get started, I do want to remind you, as always, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, great. Everything is looking good. Go ahead and get rocking. New Pathway said, about to drop some knowledge. Vote Crypto Trend Trader for Broski of the Year. That's funny. All right, cool. So, obviously quite a bit of volatility. We got our daily closing right now on Bitcoin, and we had quite the drawdown, currently at 37,500 roughly. So about 50% down from the all-time high roughly. So let's just let's start what we normally do, and then we can just kind of work our way through the assets. So let's go ahead and start with our 10-year Treasury. All right, so obviously we had our Fed minutes today. They came out and said that like the recovery is going well, and they're thinking about tapering purchases. Maybe, but probably not. But they're thinking about it. They considered it. They had a bad dream about it. So it's kind of funny, but I guess this is their way of basically just telling the market what's up. So this is like the heads up before the heads up before the heads up. Bubbly says, you calling it, bro? Yeah, what's up, man? Good to see you, brother. Yeah, 10-year, people are saying it can't break through the high. I mean, it's just consolidating. It's consolidating above the range, exactly like we expected. It's still very clearly above all the moving averages on the daily. We crossed 8 and 21 back to the upside. We bounced our support line absolutely perfectly. This is like textbook, absolutely exactly what you would expect. And obviously, since we broke into this range right here, we called for the retest. And since then, a consolidation. We called for the perfect touch right here. And then since then, been moving back up to the top of the range. So, we're at 1.68 on the 10-year Treasury now. I mean, from the high right here, we are down 4.47%. So, we're basically at the all-time, or not the all-time high, but the cycle high right here. So essentially right on track. I would expect this thing to sometime in the near future, I think we'll start to see it like oscillate a little bit more. And then I expect to see like a powerful burst. In all reality though, we're basically hanging out in like the middle of the range. This is our, Fibonacci that we've already broken above. This is our Fibonacci target at 2%. More realistically, we will probably end up getting up to 2.5 before like, shit really hits the fan. But, basically between these two yellow lines right here, we're at like the halfway point. I would expect sometime in the next few weeks us to just slowly like kind of pressure up, and then we'll get like a burst to the top. Probably overshoot it slightly. Markets will sell off, obviously acting inverse to the move in the interest rates, because the fact of the matter is in order for prices to say at like bubble levels up like extremely high like they are now, interest rates have to be cheap as hell, because money needs to be free, or else people aren't going to take it. Because the fact of the matter is as long as money's free, people are going to get as much as they can so they can invest it, because they have nothing to lose. But as soon as there starts being like a cost associated with it, people start reevaluating, do they want it or not, how much do they want, where are they going to put it at, do they have a good place to deploy it, etc. So we'll see that happen. We'll see how it plays out. I know everybody's saying interest rates won't rise because the Fed won't allow it. The Fed does not decide if interest rates rise or not. The Fed attempts to control interest rates, but they don't control them. They attempt to. They don't decide when interest goes up. They don't decide when interest goes down. They don't decide inflation. All they can do is like set the actual interest rates on like the Fed fund rate. But in all actuality, market is as much as it can be a free market, and will determine that. So, and then we did get an interesting move on the dollar, which obviously you would expect, with like a strong sell-off in crypto, as well as, sort of a pullback in traditional markets. I mean, nothing too serious. on traditional markets, but we obviously saw a powerful pushback to the upside. I'm not ready to get bullish on the dollar again. I mean, in all reality, we broke down from one key level here, retested it, failed to get back above it, broke down from a second key level here in yellow, got back above it and failed to hold it. And now what? We're going to push back up to again. If we break back above this range, consolidate above it, and then start to push back up, I can maybe get bullish on the dollar again. 200 moving average, very powerfully, still sloped to the downside. We're still below 200 exponential and simple moving averages. As far as I'm concerned, the dollar is weak. Now, there's obviously a lot of like fundamental things that could change that. Maybe they decide on the infrastructure plan and it's much less than they expected. Maybe, there's a million different things that could affect it. But as far as I'm concerned right now, dollar looks weak. Still broke down from a key range. But once again, the most important thing is that we held above this level here. Now, you could say that the wick was down here. So breaking below this close right here, threatens the uptrend. But in all actuality, the one and only level that really matters is right here, that 89.3 level. Because if we take that out, then it's no longer going to be a low, followed by a high, followed by, a higher low. If we break down below that, it's basically just a breakout, an underperforming, move to the upside, and then just more downtrend. All right, so let's work our way to crypto and give it a little bit of time here. As I know, obviously, most of the viewers are interested in crypto, and only a few people here right now. So welcome everybody that is here. Good to see you as always. Appreciate you guys tuning in. So let's just, and I'm going to try to keep it short today. I want to keep it in like that 2-hour range. We went way over on the last one. And so here we have the Dow Jones Industrial. We obviously sold back off pretty heavy, bounced that key support area, which was essentially just that flat bottom support right here. Broke down from it, got bought back up, but we're just lingering at it. Looks weak. This candle right here was obviously the canary in the coal mine. It was a rejection, shooting star, top of the range, pushes up higher to a new all-time high, gets rejected, ends red, gaps down, massive sell-off again. And then this is essentially just like a dead cat bounce after that. But we're now just hanging back out on that flat bottom support. The next target on this move, obviously, would just take us right back down to this red line, which is going to correspond with the 89, which obviously we're just bouncing like the 50, 55 in the support right here. And while this is like essentially like a bearish candle and represents like a potential topping candle, not pattern, this, typically a candle like this, the inverse of that, would tell you like a hammer is what that's called. That would tell you basically that, the opposite of this. If this is a potential topping candle, this is a potential bottoming candle. In my opinion, though, this is sort of like a reaction rally off of the moving averages back up to a key support level. But in all reality, I think we're going to end up back down here at like that 32,850 range for a retest. And then after that, we can see, does this hold above that level? I'm guessing no, but we'll have to wait and see. Obviously, this still looks bullish. We're basically hanging out at all-time highs. But, I'm extremely skeptical of pretty much all markets right now as a whole. There are like small pockets within like the different spaces with potential, in my opinion. But I'm more of a value investor, so I don't like buying things like at ridiculously high levels. S&P, SPY, this is basically already done that move. So if you're looking at the Dow Jones, we basically broke above that key support, got up here, and then this was like our flat support right here. Resistance rather. This was our support right here. This one broke back down and already retested that breakout level. Once again, still looks bullish, but I'm not bullish on it. I can't be bullish on this thing at this price level after we essentially broke through, like a massive long resistance line and got literally no follow through. Now, if we start to move back up to the upside from here and take out the high and start seeing like volume come in and, something fundamentally and technically changes, yeah, sure. But again, it's hard for me to get bullish at ridiculous levels like this. So next is IXIC. This is the NASDAQ composite. This was overall a bullish pattern. Flat resistance at the top here. ascending support. So we're basically just putting in a series of like the same high and then higher lows. When we broke down from that though, the immediate move is to come back up and retest our previous support, this blue line here, to see if it acts as resistance, which it clearly did. We then gap down. We now immediately got a reaction rally back up to close the gap. Same thing. This is obviously the most bearish. Well, I shouldn't say that. The NASDAQ and the Russell are both much more bearish than the S&P and Dow Jones. But again, it's hard to get bearish on these things when they're just like consolidating at the top of range. The time to get bearish is when you're at the top of the range and it's showing weakness. So Russell is next. This thing's playing out perfectly. This is our head and shoulders pattern. Called this out way ahead of time. It has perfectly developed. It gave us our exact shoulder top right here. We then started forming this red resistance line with our blue support. We then broke down from our support, came back up, retested the blue as resistance, much like the NASDAQ did, and then we got rejected, sold back off, put in a, sort of a bullish buy right there. But, once again, this is a perfect example of, that same candle. This looks bullish to people. They say, oh, it's bullish, rejection of lower prices. So we're going to get continuation to the upside. But you can't just go off one candle. The candle is literally like the canary in the coal mine, because right after that, we had a massive bearish engulfing candle. Came back up, retested the range, sold back off. I expect this to come back down to the neckline. And honestly, I think the Russell 2000 is going to get absolutely crushed. I can't remember what the actual numbers are on the Russell 2000, but I want to say 50% of the stocks that make up this index are not profitable. So there's going to come a time when if you don't actually make money as a company, people are going to stop investing in your trash bag company, because what's the point of a company is to make money. So tons of zombie companies, and I expect them to eventually die. Or at least, sell back off to a point where they're actually reasonably valued. XLE is next. This is our energy ETF. We already hit our measure move perfectly on this. That was a 13% trade to the upside. So I'm waiting for this to develop, see what happens. Essentially right now, it looks like a double top. We are above our moving averages. I'm massively bullish on this long term. We're bouncing the 200 very nicely, hanging out basically at the top of the range. But as far as I'm concerned right now, there's no reason to be jumping in on these things. We're showing weakness in the indicator oscillators. So, and it's the same way for the majority of these. You would expect them to essentially have a bullish reset where price action just kind of goes sideways, oscillates, and, indicator oscillators kind of cool down, or vice versa. Maybe the indicator oscillators are correct and these things just start dumping back down. But I expect energy to be bullish in the long run, but this not an exciting level for me right now. ICLN, the clean energy ETF. This thing is still bearish. It's basically just been putting in a series of lower highs and lower lows. Cannot seem to break above either. I'm going to turn off the moving averages on this so we can get a little clearer of a picture. Cannot seem to break above our short-term red resistance right here, nor can it break above our long-term pink resistance. It also has taken out our low here, took out the low again, and now here we took out the low again. We did get a reaction rally off of that, but eventually we're going to get essentially the measure move breakdown of our descending triangle, in my opinion, at which point in time I'll be able to get a value entry. I really would like to reaccumulate at the 0.5 right here. And this is our massive Fibonacci from essentially last year, the 1 year ago March capitulation event. We obviously put in new highs since then, and now if you Fibonacci from the bottom of that range to the top of the range, you're going to get first our 236 pullback. We got a very weak bounce off of that, and now here we are essentially back down almost to the 382, which is going to look much more like a buying level to me. We have put essentially these three potential trade setups, and I had spoke specifically about how this looked extremely bearish. I'm not going to jump on this one right here, but just to give you an idea, that 3-to-1 risk reward ratio and the potential if we did start showing some bullishness, this one is much more desirable to me. If we can get back down to that 382 level, and then we can get that entry we want off of that support, and it starts showing basically a little bit of strength. That's 72% to the upside. and 18% to the downside if it took out the 0.5. Now again, I wouldn't run a hard stop on this because honestly, I'm really looking to get in at the 0.5 level. Now again, I don't know if we'll get down that low, but Charles Dow theory, typically when you have a nice run, you sell off 50% of it, the market steps in, buys it up, and then you get continuation in the predominant direction. We are seeing quite a bit of strength from the bearish control zone here, but again, last time that happened, all we did was top out right afterwards, and then here we're getting it again. So could we just push up a little bit higher, retest our breakdown resistance, support as resistance, which is basically what we're doing right now, and then roll back over to either the 382 or the 0.5? I mean, I'm betting on it. I'm counting on it. So, but we are starting to show a little bit of strength here. We do have the blue slope line. Histograms are green, and it found support on the slope line. So maybe we do start to strengthen here. If we can break through these two, corresponding resistances right here, I'll just take the late entry back to this trade setup right here, and then obviously take some of the profits at the top of the range, but expect continuation from there. At least I do. So but again, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, sweet. So let's just jump into let's do tech next, and we'll run on down. There's a couple like random like stocks and ETFs and stuff kind of like tossed in some of these, but overall I just look at like the four kind of like sectors or groupings just for convenience. So here we got Tesla right here. Tesla still looks extremely weak. We came back down to retest that low, took it out. We're now below it. We bounced a key support level, which is good. We're bouncing that 0.5 right now. But how far did we bounce it? Like none. We barely bounced it. We're still below 200 exponential. We're still below 200 simple. They're basically flat. I mean, let's be real here. If we take our low back from March, which was $68, take our high from $900 in January when this thing topped out. The point, 236 is basically just slightly out of reach at like $500. So I definitely think we get there. I mean, we're only $60 above it right now. From that point in time, though, the 382 starts to look real juicy. And that's realistically the top of the range I'm interested in. Between the 382 and the 0.5 is essentially what I'm looking for. But again, the measure move for, basically like this neckline right here or this key support level, measure move on log scale. If we just take that and move it back down, that's going to take us down closer to the 618, which is going to give us like that $200 target. Now, I'm not greedy. I'm not going to like not buy any Tesla until it gets to $200. But I will definitely be looking for it somewhere down here in that range. That also corresponds with our previous top for what I'm calling our wave one of the Elliott wave structure, which is $200. Now, again, we don't always get back to the top of the one. That's just the area we would expect to find support. That's the lowest we want to see the 4 come back down to. So in all reality, between the 382 and the 0.5 is where I would expect that. But again, I mean, we don't know what's going to happen in the near future. I mean, essentially the only reason Tesla was even able to get onto the S&P is by having, by essentially like being a quote unquote profitable company. And the only way Tesla was ever even a quote unquote profitable company was through government subsidies. So now they have literally made more money trading Bitcoin than they ever made selling cars. So minus subsidies, minus Bitcoin, like trading, are they a profitable company? No, not even close. So, again, very bullish on Tesla long term, but I expect this thing to come back down lower. And, when you see something at the bottom of the range at key support and it comes down and touches it, you would expect to see like some kind of bullish movement from it, either a rejection wick or a powerful move off that level. You don't want to see this little limp-dick candle right here where it basically pushes up like $10, and then, oh man, whew, what a green day. We were able to close the gap, the $10 gap. It's an absolute joke. So NEO is next. These Chinese stocks are starting to show a little bit of strength. Not specifically NEO, obviously looks like trash. But we'll have to see what happens with them in the near future. Again, I want to see this come down at least to the 236 or the 382, at which point in time I might get interested in reopening a position on this. We are getting, bearish control zone, starting to get like the exit of the bearish control zone. We got the blue, slope line and multiple green histograms in a row. But, in all reality, I would expect that to be more of a scalp back up to like the key resistance here in red, or, depending how you want to look at this too, you could sort of draw like some kind of resistance like this as well. So you could have a couple different like resistances to keep in mind. But at this point in time, we broke down from a key support. We took out this descending triangle bottom support right here, sold down. This looks like a retest of that support breakdown, which now is acting as resistance. And I would expect further movements to the downside. So, NEO still like way more potential to the downside than upside. But, again, who knows? We might start seeing a little strength come out of this. But in the meantime, I'm not rushing back in on the old NEO. Alibaba, this one broke down from what I would call a key support level. Our ascending trend line right here in green was key support. We touched it a bunch of times. It held up very nicely. We broke down from it right here. Couldn't even get back up for the retest. We may still come back up for the retest. This is obviously we're at, a lot of these are near or at like my entry level zones. But again, I want to see them start like exhibiting some kind of strength, some kind of bullish divergence, just like something. We have like some very minor bullish divergence on the daily starting to show up here. But, we could just as easily start getting like red histograms come back in and sell back off. But this is the key level I'm looking at, because if this is our one and the top of the one, we really don't want to see this go any lower than where it's at right now. So, but again, you could have took that buy back here, got a nice little scalp off of it, and we're right back where we started, technically lower. So we'll have to see how this plays out, but it's definitely starting to get to like those juicy levels. And, long term, mid to long term, I am massively bullish on these Chinese stocks. Baidu is next. This is like almost like the same chart, honestly, as Alibaba. We have this very key support line here in blue. We're down at it right now. This was what I had said I expected us to touch. We basically broke out of, a bearish pattern. Normally we would get like a bullish, push to the upside. It failed, came back down. We retested for support. And then we almost made it to our 0.5 of, this entire wave basically from March. So, this thing has sold off quite a bit, obviously down 50% of that move we gave back already. So, we're starting to get to the levels where I would expect to, see this thing pump. And there's a couple trade setups in place here. Again, I'm not rushing into these things. I'd rather just wait for a little strength and, maybe carve off a little bit of profits. But, we got a 29% potential upside and a 9%, stop loss if we lose the 0.5 area. Actually, I would probably play it a little lower. But, realistically, it's like 4-to-1 risk reward ratio. So, or 3-to-1 rather. And then if we get up a little bit higher, basically get that measure move of the breakdown, could get as high as like 60% move to the upside. But the truth is, this has showed so much weakness already. I think that if we do get a good buying opportunity off one of these key fib levels and we start showing strength, I think we'll probably come back up and take out the previous high. But again, we got to kind of see how that goes as it happens. But all reality, I'm just waiting. Just waiting in the weeds to pounce on these things. PayPal is next. Same thing, descending triangle. PayPal looks weak. It had started to form like this little channel to the upside, little ascending channel, breaking through resistance. Got absolutely crushed over here, broke back down, could not get back above the bottom of the channel here. And now, it's essentially just hanging out at the lows. The descending, triangle breakdown the measure move would take us back down to like $140. So could we lose another $100 in value and get down to the 618 key Fibonacci from that same level? Yeah, 100%. Does it have to happen? No. But I mean, again, I'm not trying to rush into these. And the truth is, I would rather be buying Chinese stocks than American stocks, because I think the Chinese stocks are essentially just like a month ahead. I think that essentially the Chinese economy is going to tell us what the rest of like the economies are going to look like ahead of time, because they basically, they were dealing with the pandemic before everybody else by a month or 2 or 3. So essentially like the recovery, I would expect to be like a month or 2 or 3 ahead Not to mention the fact that they actually like manufacture stuff. Their entire economy is not built off of like goods and services. So Apple is next. Apple, we got our measure move breakout of our channel, came back down, lost our key support here in white, which was expected. We're touching our 200 moving averages. We got down as low as the 382 of our Fibonacci level from, this is from July 2020. This is not like the long-term Fibonacci, like some of the other charts we were just looking at. This is just from another key swing low. In all reality, could this just start taking back off to the upside? 100%. It definitely could. But this looks like a topping pattern to me. We essentially have, a top right here. Then we take out that top just slightly. Then we try to come back up and fail at that same level again. And this is basically what Bitcoin did. This looks like a giant Wyckoff distribution pattern to me. That's exactly what this looks like. And many of these charts do. So I think Apple is getting ready to have a pretty big sell-off, honestly. Zoom video, ZM, Zoomy Zoom. This thing is weak, just selling off in this channel. Nothing has changed. We came back up. We retested the heart line, got rejected at the heart line. Are we going to get our continuation back to the top and get the rest of this trade to play out? Yeah. But, could it easily just fail and come back down to that level again? Sure. And, with the trailing stop loss in place, once we get away from our entry point, there's no reason not to move it back up. So if this thing does sell back off and takes out our stop loss, all we do is just get back out of the trade with no fees, no gains, no loss. And we just wait and take another stab at it. And we get our capital back and we can deploy that somewhere else that looks promising. And that would just be a failed trade setup, which is fine. It's just fine. Not every trade has to win. Some are going to win, some are going to lose. And, if we put our stop loss in place accordingly, sometimes we're going to take a free trade and end up back out of it for free. Sometimes we're going to take a free trade and get massive gain. Completely fine. We are seeing a little bit of bullishness from the indicator oscillator down here. But look, this bearish control zone has, the bears have been in control since we topped out, basically. Multiple occasions. Every time this turned green, the bears were in control. The bulls have briefly taken control one time since then. So does this make me bullish? No, not at all. Not at all. I think we could easily get continuation to the top of the range for that 38% move total from our entry point. But in all reality, that's just going to look like a rejection off of the 200 exponential or the 200 simple, the top of the channel. If we break out, for sure, I'll get bullish after that. And if we wanted to put, essentially like a second target in place from our entry point, that's completely fine. We can do that. Essentially where would the breakout take us? Probably somewhere up here like the 786, at which point in time, I would be paying attention to, is this going to be bullish or bearish? But basically we can take from the bottom of the channel to the top of the channel and get our measure move of the channel breakout should that occur. And again, that's going to take us up right here to like the 786, maybe a little closer, right in between 786, 886, $500, $500 on Zoom. Yeah, we could get there. That's, from where we're at right now, we're at 310. So that's another $200 to the upside. When it's all said and done, that's 86% move with what worked out to like an 8% stop loss. So 10-to-1 risk reward on that. But again, I'd be taking probably half my position, quarter my position, something like that at the top of the range. Just locking in those gains. Pinterest is next. So Pinterest is a great example of like that rejection candle at like, basically a key level here, in the same way that, something like with a long wick to the bottom is going to look like a rejection of lower prices at a key level. But from then, it's very clearly going to enter a bullish phase, bearish phase rather. We broke down from the 200 exponential and simple. The moving averages are literally flat right now. And, we basically just touched the 236 of our, 1 year move. Could we get lower? For sure. I mean, 382 is down here at $38. So it's going to look a lot juicier down there than it does now. But, I mean, it's definitely already looking juicy. I mean, this thing's down like 40%. I mean, most of this stuff has gotten absolutely wrecked. But the truth is the real question is when it comes to tech and like a lot of these Chinese stocks and whatnot is, are they going to just bottom out first and then start moving back up? Or are they going to get absolutely wrecked like .com bubble style? Because I'm not sure which one it's going to be at this point in time. No one is, obviously, but I think there's a high probability that it's going to be like a .com type situation where these things could take literally like months or years to recover. But we'll have to see. We have to wait and see. It depends what the reopening looks like. Depends what all this stuff looks like. I mean, I think at this point in time, at least in the United States, we're basically like, quote unquote, moving past the pandemic situation. I can't speak to that for other countries. I know there's still a lot of other countries that are in rough shape with like less than 5% of their population vaccinated. I think here, like over 50% of adults have had at least like one vaccination, and it's like 75% of people over like a certain age have had both their shots. I can't even remember the stats, but I think at this point in time, like we're reopening, they lift the mask mandate, like scare tactics just aren't going to work anymore. For now, until they make something else up, until they come up with some other reason. But again, we're below 200 exponential, 200 simple. Looks weak. Pinterest looks weak. Long term, I like it. I think it's got potential. But I mean, it had an epic run up from basically like $10 from that capitulation sell off. The previous all time high was $36. So, and that lines up with our 382. So is it realistic that we bottom out at the 236 and then get continuation? It's possible. I think it's more likely we get closer back down to like that $40. At which point in time I would expect it to find support. Bumble on the daily it got absolutely wrecked. This is our descending triangle breakdown. We already got back down to our, essentially from our initial IPO up to the top, our Fibonacci extension level that we're at right now is between the 3.618 and the 4.236, which is like, those are like the largest Fibonacci extensions that I like even use. So at this point in time, like we've already basically hit my target. We hit the measure move to the downside. Can this thing start carving out a bottom? Sure, but does it look like it's carving out a bottom right here? Or does it look like the bears are just absolutely dominating Bumble? That's what it looks like to me. Looks like they're absolutely dominating. And the truth is, like these dating apps and stuff like that, like they did well during like lockdowns because people are like, oh, I want to talk to someone of the opposite sex, but I'm too afraid to go outside. So let me get on my dating apps. But in all reality, like, I think they'll succeed in the long term and they'll do well and everything, but people don't want to use this shit. They want to meet people in real life and whatnot. You don't want to get catfished on Bumble. Airbnb. This is another one, basically from its IPO to where it's at now. It gave back everything. Everybody that ever got back into this publicly is underwater. We bounced the 886 like we were expecting, came back up to the 786. Still looks like total crap. We did get one single green histogram, which is good. If we get a second one, I could get bullish for like, a move back up basically to like retest one of these key breakdown levels, maybe like 150 or 160, but I'm not looking to rush back into Airbnb. I think this is another one that people got super excited about, but eventually, are people going to stay in Airbnbs or are they going to stay in hotels? I think it's a combination of the two. Some people like Airbnbs. They're like, a lot of times they'll be cheaper. They're more personable. They have cool little themes to them. They're fun. They're different. But, let's be real here. In all actuality, like hotels aren't just going to go away. So, the idea of people not wanting to be surrounded by a ton of other people is like bullish for something like Airbnb, in my opinion. But, once things go back to normal, I think people are going to go back to hotels and then they're still going to use Airbnb. But Airbnb is not going to like dominate the space in the way that it has throughout this pandemic. So could easily break down from here too. Typically, once something goes beyond the 786 down to the 886, whether it's to the upside or to the downside, I'm bearish on it. There's a shitload of, overhead resistance at this point in time too. I don't want to give you guys the wrong impression on this one because I'm going to tell you the truth right now. I'm bearish on Airbnb overall. I think it goes down to, I think it takes out this low well before it takes out the high. But in all reality, I'd be looking at like the 1.618 Fibonacci extension of the IPO to sell off bottom, which is going to give us like $84. So could we lose another 50% on this bad boy? Sure. I mean, did it get absolutely crushed from the top at 219 already? Yeah, so maybe it doesn't go back down that low, but looks terrible. Dash, this is DoorDash. This same type of thing. You know, this thing IPO'd, everybody got into it. It got like the most massive rejection candle ever that tells you, oh, you should probably get the hell out of this. And then since then, you know, try to come back up, retest, put in a new high close right there. But this was obviously just a fake out or a failed breakout, whatever you want to call it. It's got an absolute crush. Same exact situation. You know, it is literally below the IPO levels. You know, and this is another one that was like a beneficiary winner of the pandemic. But again, like, are people just going to like sit at their house and order food like as much as they did when they were on lockdown? No, hell no. Because people are going to be out and about at their jobs at some point in time in the future, like going back to reality, doing normal stuff. So that alone tells you less people are going to be ordering meals online, because what are the two options when you're on lockdown? You're either cooking food for yourself at home, driving somewhere to pick it up, or having someone bring it to you. What are the options once everything's open back up? Well, you have those same three options, plus you're out and about, so you just buy food wherever you're at, or eat when you're at your job, or on your lunch break, or whatever it is. So, you know, realistically, could DoorDash still do well in the future? For sure, I definitely think it will. But I mean, I don't expect this thing to just all of a sudden start breaking back above all this selling pressure that's above it, all the people that ever bought into it that are underwater on this, you know, piece of shit IPO stock. But again, bullish on it long term. But, you know, this chart right here, this is the chart of a loser. Just like the last couple we looked at. This is what losers look like. Everybody that ever buys into something publicly is a loser. Not like at life, but they lost money. SMH, VanEck, Vector, Semiconductor, ETF. You guys know how I feel about semiconductors. Extremely bullish, but there's, you know, supply chain constraints, you know, could lead to underperforming quarters. We'll have to see. You know, we're definitely seeing a little bit of life from the charts here, but, you know, I don't like to see this. I don't like when the histogram is below the slope line and the slope line flips over blue. That's not good. That typically leads to price action, the histogram moving back up, and then getting rejected by that blue slope line. We are, however, seeing what I would consider to be like, you know, a reset of our indicator oscillator. We got the hard sell, left the bullish control zone, sold off, you know, found support at key levels through here, and now here we are in the bearish control zone, about to get the Stoch flip back to the upside. Couple green histograms in a row. I would rather see, I mean, honestly, this looks like just a sideways channel to me. We have a top, we have a bottom. You know, as long as we're inside of this channel, I would just expect us to, you know, oscillate. And you guys know how I feel. Buy support, sell resistance. I'm going to keep buying at the bottom of the range. I'm going to keep selling at the top of the range until we either break down from the bottom or break out through the top. So, but again, semiconductors, I'm extremely bullish on. I do prefer the ETFs though, right now, or like indexes or what. I mean, when I say ETF or index, like I essentially like kind of use those terms like universally, but I really just mean more than anything like the diversity of the space. Like the real difference is like, you know, the index is going to give you exposure to a bunch of them. The ETF is typically going to give you exposure to a bunch of them, and then it's also like actively like managed or whatever typically. So you're going to see like, you know, maybe higher fees, but also like theoretically like better movements within it. A little more like, usually a little more, well, depending on the ETF. I shouldn't even make that distinction. But in all reality, like, you know, I don't, like, for instance, I don't want to own like, what is it, TSC, Taiwan Semiconductor right now, just because you don't know what's going to happen with China and Taiwan. I don't want to own some of these American semiconductor companies because we're not good at manufacturing things. We don't do it. We don't make stuff, you know, so or all of a sudden we're just going to like do a great job making semiconductors. No, we're probably going to shit the bed at it, you know, as a generalization. So, but I am still very bullish on this long term. But, you know, a retest of the bottom of the range of the channel is essentially just going to give us one more test of a key support level. And it's also going to correspond with 200 exponential and simple moving average. And I will take that trade, obviously, if we get back down there again. You know, it worked out once. come back down maybe, and then we get rejected at a lower high, and then we have a high, a lower high, and then a third lower high, and then it looks like a descending triangle, and then we break down from there. Definitely a possibility. But, or maybe we come back up, take it out. I don't know what's going to happen, but I'm just going to look at ARKK right now, ARKK, which is the innovation ETF, because, basically all Cathie Wood's funds look exactly the same. All charts look exactly the same. I made that silly little like video song about Cathie Wood and, the ARK record outflows or whatever. And, that was like before the outflows came in, and then what happened? Record outflows, funds getting absolutely crushed. I called it. I mean, when she said I'm buying massive amounts of Coinbase, I was like, oh, this is how it ends. This is how dreams die. Basically broke down from a key level. I expected to come back up and retest that support as resistance right here at the 236. But the truth is, these things are so weak and underperforming. And, like the Cathie Wood trade is like the Tesla trade. Like, it's wore out and beat down and broken. She's not all over CNBC anymore. She's not all hyping up everything anymore. There's more people that are like, I think over 50% of the people that invested in her fund are at a loss now. So what happens typically after that? It leads to a capitulation event. We are in the bearish control zone, getting ready to have a cross to the upside. We do have multiple green histograms in a row, but we are below the blue slope line, which again typically leads to a rejection, which would correspond with us coming back up to 200 exponential and simple moving average, as well as the 236, and getting rejected about 109 roughly. We also have a flat slope on the 200 exponential and simple, which typically is going to mean that they're going to roll over, at which point in time, if we are below the 200 exponential and simple and they no longer are sloped to the upside, I'm extremely bearish on an asset. So in this case, you could just say Cathie Wood in general, I'm bearish on. Short term, short to medium term. Long term, I think she's got the right idea. I really do. And, if you got into some of these early, you did very well on them. But the truth is, and, being a successful investor or trader means you got to know when to get the fuck out. You cannot fall in love with this stuff. So for all the people out there that fell in love with Cathie Wood, you guys know how I feel about her, man. She did well. I'd throw her a pity smash. I mean, she's a little older than I like, but I'd crush, But the truth is, as far as like her funds and her trading and her trades and her investing, massively bearish short term. This looks like shit. Maybe it bounces back up, though, and starts showing strength, and then we start pushing to the upside. Tech explodes, genomics, all this stuff, and I can eat my words, and I'll get on here and apologize, but I doubt it. So, yeah, that's it for tech today. Let's move over to... I'll jump in comments real quick. I'm going to do commodities, and then we'll do crypto last, so... All right. Gold... Okay, so you guys know, obviously, we got the exact move that I've been calling for. We broke out of the channel. We got the double bottom at key resistance at a key Fibonacci level. Everything looks great. This is exactly what we're expecting. We are now back at literally the purple descending resistance line, which I said once we break through that, I'm going to start getting more bullish. It also corresponds perfectly with the 0.5, which is a 50% retracement of the sell-off. So essentially, bearish sell-off followed by a bullish reaction rally, which typically results in continuation in the direction of the predominant trend, which if this is the trend we're paying attention to, that means we're going to get a bullish move to the upside followed by a bearish sell back off. I know everybody's extremely bullish on gold right now, but it's not time to be bullish. Everybody was extremely bearish right here, and now they're extremely bullish right here. So they were bearish at the bottom, and they're bullish at the top. I am bullish at the bottom and bearish at the top. What's the difference? Buy support, sell resistance. Measure move could take us back up to that triple top potential right here, which would be the breakout of our channel measure move. We could easily get back up to like 1940. Let's be real, though. 2000 is going to be a tough resistance. It is going to be very hard to get above. There's also a lot of manipulation that's going to stop gold from going to the upside because, it's actual sound money. So you don't want people leaving all your like shit assets that are in massive, parabolic bubbles and buying actual gold, the longest store of value, the most reliable store of value ever of all time. No, you don't want gold to push the upside. If gold starts pumping to the upside, that's going to validate people's fears of inflation and lead to capitulation in speculative assets like, stocks, cryptos, everything, Beanie Babies, whatever your NFTs, whatever your speculative poison is. We are at the bullish control zone. We've got multiple green histograms in a row. We've got a nice, powerful blue slope line, accelerating to the upside. Could we get like a sweet burst up to like 2K? We 100% could consolidate right here and then get a massive burst up to 2,000, which is going to correspond exactly with our 786 Fibonacci retracement. But I really do just expect it to sell back off from that point in time and come back down. Does it have to break through key supports or anything? No. Does it have to go to new lows or anything? Like, hit any of these other targets I have in place? No, it definitely does not, but I expect that it will. It's very unlikely, typically, for a pattern like this to break in this sense. Almost never will you see a pattern like this, a channel or a descending broadening wedge, whichever way you're looking at it. Very, very rarely will you see it come back down to the bottom of that channel, to the support, and then come back up to the top and then just straight break through. That almost never happens. It almost always will come back to the top of the range, then come back and retest the middle of the range, and then it will get a breakout in that direction. So that's what I expect to happen. If it's going to break out to the upside, it could very easily just get rejected here. Silver, man, I hate this silver chart. There's so much going on here. Silver basically has just been operating in this sideways channel. I expect it to continue operating in the sideways channel. We did have our lower range of the channel here and then came back down to test it and found support at like our slightly higher range, which is like key Fibonacci level. From then, we were able to break through our heart line of the channel, find support on it, and then move back up towards the top of the range, which is, you could argue it's anywhere between $28.60 and $30. We got rejected exactly at the top of the range, put in a bearish rejection candle, shooting star, at which point in time I would expect probably us to sell back off here. Maybe we come back down and retest the heart line and the breakout of our descending red trend line right here, and then we get continuation. Maybe not. We'll have to see. But, silver's just going to do what gold does. Let's be real. If gold typically breaks out to the upside, silver underperforms initially and then overperforms later on. But gold 99% of the time leads the way. So that's what I expect to happen. Now, this is the chart that we really want to pay attention to. This is XAU to XAG. This is gold to silver ratio. Obviously this was a bearish trend that we were inside of very clearly. A descending wedge getting tighter and tighter and tighter. We broke through our key resistance in red right here, this was like basically like when silver went to like $12 during like the capitulation event, and reached all-time highs on gold to silver ratio of like 128 or whatever. I'm very bullish on silver long-term in comparison to gold, and very, very bullish on gold and silver in general. But I think gold will underperform silver in the long term, or silver will overperform gold in the long run. But right now, this chart is telling us that if we break out of this wedge pattern right here, and we do get our measure move, that's going to be up to a key Fibonacci level, like 0.5 retracement of, that massive gold-silver ratio. Take us up to like 90 bars of silver equals 1 ounce of gold. That's extremely bearish if you're at 67 right now. So this move to the upside means gold is holding its value or gaining value faster than silver or better than silver. We are now basically at the top of we have literally tested the resistance and been slowly getting pushed down. And typically when this happens, eventually you get a powerful burst to the upside. So if we get our powerful burst to the upside, even the initial burst takes us up to like 72, maybe to the 236 at 74. Maybe we get the measure move quickly. What is that going to mean? That's going to mean silver is probably getting crushed and gold is like kind of selling off. Or maybe gold is just absolutely going parabolic to the upside. and silver is just like sort of going to the upside. But we'll have to see. Maybe this corresponds with, you know, revaluing gold to offset some of the deficit. I mean, I don't know. We'll have to see. There's tons of fundamentals that we'll later on look back at and be like, oh, yeah, it's because of this. But the truth is, the chart always tells us what's going to happen way before the Elon Musk tweet even comes out. So platinum did exactly what we've been talking about. It's operating inside this blue channel, putting in our, 5-wave structure, coming down for the 4 right now, operating inside of this little mini channel right here. And where we at right now, we sold off from the top of the channel once again to the bottom of the channel once again. We're literally dollars away from our target, dollars away from our support zone right here, which we would expect, obviously, this blue support to continue acting as such. The way that this top resistance is extremely powerful and has been rejecting price every time, I would expect the bottom support to do the same and reject lower prices every time. So, from this point in time, I mean, look, let's be real here. I mean, this is the trade, just back to the top of the channel, versus essentially, depending on where you're going to put your stop loss in at, maybe we put it below this previous low right here, because if we come up here and then we take out that low right there, it's going to look like a high, then a low, then a lower high, then a lower low. So we don't want to see that happen, obviously. But, in all reality, what is that? It's a 6% stop loss with a 10% target to the upside. So it's not quite a 2-to-1 risk reward, which I typically won't take anything less than 2-to-1. But the reality is, you're looking for essentially like a decent entry on this for like the real trade. And when I say the real trade, I'm talking about like the actual trade to the back, to the top of, back to the top of the blue channel. So in all reality, the trade I'm looking for off of this range, this is just a little like scalpy scalp. This is the real trade. It's back from the bottom of the blue channel to the top of the blue channel. And in this case, it's a 35% move to the upside, with that same stop loss potential of 6%. So you're looking at like a 6-to-1 risk reward ratio, which obviously is like 3 times my minimum that I like to take. So this looks super juicy right now. Also, price action wise, fundamentally, technically, like based on history, historical senses, platinum and gold are typically like 1-to-1 even. So platinum is very undervalued in comparison to gold right now, as gold is like nearing $2,000 and platinum is still down at like $1,100-$1,200. So that 35% move to the upside would only take platinum back up to like $1,600. In all reality, based on Fibonacci extensions, based on our wave 1 and our wave 3, that would tell me that essentially our Fibonacci extension target on platinum is going to take us up to 2,000, which would basically bring us back into line with a 1-to-1 gold ratio. And then obviously, we'd be sitting pretty right there. That's what I expect to happen. So right now, I think, honestly, I love gold and silver. Don't get me wrong. Love copper, massively bullish on it. But I think that platinum's the place to be right now. But I'm all about diversification also. Like, I think you should be invested in all different metals, copper, all different like commodities, all different everything. I'm all about diversification because there's always going to be something overperforming and there's always going to be something underperforming. And if you're not in the overperforming thing, or you're all in the underperforming thing, you don't have the ability to shift between those assets, because I don't like buying highs. I like buying things when they're low. So platinum is at key support and, in my opinion, undervalued in comparison to gold. So looks pretty juicy to me right now. So platinum, uranium is next. URA. This is the uranium ETF. We are at that key Fibonacci level. Let me go to I'm going to just go to the monthly for simplicity's sake on this thing. So when we sold off on this from $134, and then we bottomed out at $6.82 on that massive sell-off last year. From that point in time, came back up, retested the 236, blew through it, came back down, retested it for support, moved up to the 382, which corresponds to the 89 moving average on the monthly. We took that entry, obviously, trade at 16.59, still in that position. I would expect this resistance, here, maybe even, pull back from this level, but we have crossed the 821 to the upside for the first time ever on this chart, which is obviously extremely bullish on the monthly. So, you know, green histograms, blue slope line, bullish control zone. You know, I think this thing's going to burst. So if we get up to the 0.5, that's going to take us up to 30 bucks. Still 50% from where we're at right now. But the truth is that's going to end up being a 77% move with a quote unquote 28% stop loss to the downside. Obviously, I would not use this as a hard stop loss. The idea is, you know, just that if we take out the 236 and break down below that and continue selling off, I think we're more likely going to put in a lower low. At which point in time, I do not want to be involved in this asset. But I mean, we're basically breaking through that at key support, holding for now. We could easily get rejected, come back down, but you know, we're above 200 exponential, we're above 200 simple. You know, the real entry was back here at like 12 bucks. Since then, we're up almost, you know, what, 75% or something like that. And I expect massive moves to the upside. I mean, if we even get any of these other key levels too, I mean, if we get back up, you know, 43 bucks, 71 bucks, that's the 786 back here. I mean, that's going to end up being a massive trade to the upside. And you guys know how I feel about uranium, but I mean, these trades on uranium could take years. Years. What was that on the, yeah, daily, okay. UEC, Uranium Energy Corp. Just another uranium stock that I like, that I own. Looks good. We're basically just oscillating at the top of the range now. Found support very strongly at the 236, but we are putting in lower highs. So, you know, again, this thing could have a further pullback, but, you know, we're above the 200 exponential and simple moving average from back here at like a buck. Still at $3 now. You know, I have obviously some very bullish targets in mind for uranium. Do we sell back off a little lower and get down to my target range at $1.99, $2? I don't know if we're going to get back down there, but you know, if we do, that's going to look like a massive buying opportunity because my target on this thing is 650. So I would obviously rather buy more at $2, but even from 3 to 650, it looks good. So to me, obviously, not financial advice. But, you know, we'll have to see how this one plays out. We will see. CCJ, Cameco, the last of the uranium stocks we're going to look at today. You know, same thing, got massively bullish back down here at $10. We're now up 100% at $20 at cycle highs. This thing, we'll go to the monthly real quick. On the monthly, we bursted through the 200 exponential and shot straight up to the 200 simple. I would expect this to act as resistance, at which point in time I want to look for the reaction. Do we move up to it? Do we consolidate at it? The longer we hang out at that resistance, the more likely it is to break. Or do we get a powerful rejection back down and then these 200 moving averages kind of close and we go sideways for a little bit? That's the most probable situation in my opinion. But I mean, this thing was at $50 before, so even from $20, if it gets back up to like $50, it's like a 3x from here. So, you know, there's definitely still a little downside risk, but overall pretty bullish. And that's on the monthly too. So again, I mean, this could take forever to play out. You know, this is from right here to right here is 10 years. It took 10 years to get back from right here to right here. 10 years it went sideways basically to down for. You know, this is that long trade or investment, I should say. USAS. Okay, I want to take a in-depth look at this one because full disclosure, not financial advice. I am not your financial advisor, but I just bought a bunch of this. You know, basically sold off from $21 in 2012, bottomed out in 2016 at 46 cents. So it sold off from $21 and bottomed out at 46 cents, at which point in time it had a parabolic move back up to a lower high, sold off exactly from the 618. So a 61.8% retrace of the move from the top to the bottom. So it came back up. Obviously, this is a bearish trend, and then we break out of the bearish trend. We get a bullish move back to the upside to a lower high, a measured move to the 618, at which point in time we come back down. We find support on the red 236 right here. So we have the 0 right here, then we have the 236, so we have a low, then we have a higher low. So now, since then, we have been forming essentially this flag pattern. Now, predominantly, when you have a pattern like this, when that neutral pattern breaks, it's typically going to break in the direction of the predominant trend, which is to the downside. So here we are now. Let's zoom in a little bit. Here we are now at the bottom of the range. So if this is our support, and then we came back down to the support again, and then we're back down at the support again, what would I expect to happen? Well, a move back to the resistance, because more than likely what's going to happen, we've been inside this pattern since 2016. So, what's more than likely going to happen? We're going to stay inside this pattern. So what am I looking at? I'm looking at like a 75% move to the upside. So for me, this is a no-brainer. It's a freaking no-brainer. If we take out, we could massively get a wick down here. It's tough to decide where you're going to pick your stop loss at, whatever, where I'm going to pick my stop loss at. But let's be real, 75% back to resistance. So even if we have, 20% to the downside, or more realistically, if we take out the 0.5, there's so much potential. Even if you do 30% to the downside, still 2-to-1 risk reward ratio. I'm looking at this whole region, this whole range as a buying opportunity on the monthly. Now, if we close a monthly outside of this pattern, that changes everything. If we close a monthly outside of here, that will change my mind, and I'll, swallow my pride and take the L on that one. We are getting the hard sell on the monthly, but we're at support. So does this thing just capitulate right now out of the range and we get a massive measure move to the downside? It is definitely a possibility. In which case we would just move this bad boy to, it gets so big because it's logs here. But if we just move this thing back down to the downside, we'd see that the measure move would take us to like negative infinity. So I don't think that's likely going to happen. Could it easily come back down though and, get absolutely crushed? For sure. But I like this trade from this area. I think more likely than not, we get the move back to the upside. Here you'll see we got the hard sell and then immediately got the hard buy afterwards, but that was at resistance and then got rejected. So is it possible we get the hard sell followed by the hard buy right afterwards? For sure. Is it possible that we fail because we just lost the slope line and we're now below it? For sure. It could go either way, but the risk reward is there. There's definitely some potential there for the buy. I was looking at the 382 to hold, and when the 382 broke, and then we basically consolidated at that 618. That's I got to take a stab at it. So we'll see on this one. Also, we're looking at our potential divergence signal on the weekly. Once we're inside the bearish control zone like that, when we get the buy signal, the sell signal, then the buy signal again, that's typically divergence and tells us that, it's going to basically have a reversal from that area. So you'll see from here, we got the reversal in the opposite direction back to the upside. The tighter these buys and sells are to each other, the more reliable the signal is to me. So here where we have the hard buy followed by the immediate hard sell tells me that there's a high likelihood if we get that hard buy signal right here, which, I think is very likely to happen because it's hard to get a hard sell signal when you're already in the bearish control zone on a weekly scale. You just run out of sellers basically. It's possible we just capitulate from this region, but I would suspect that we will be looking at this chart in the next couple weeks and there will be a hard buy signal right after that hard sell signal within 1 to 3 weeks, and then we will immediately get that 75% move back to the upside. And that's what I'm counting on. And if it fails, it fails. If he dies, he dies. But that is USAS. And if you're not familiar with that, it's American Gold and Silver Corporation. So, obviously, gold and silver break out to the upside. I would expect this thing to pump. If they break to the downside, I would expect this thing to dump. The weird thing about this is gold and silver had breakouts to the upside. This was showing extreme weakness, just hanging out at the bottom of the range, and then broke down from that range. And the measured move of this channel, basically, to the downside, well, the measure move in either direction, but obviously it broke to the downside, takes us from our breakout point potentially down as low as 86 cents, a buck. So if gold and silver get absolutely crushed on this, I will lose on USAS, but I will be able to get gold and silver cheaper, so kind of win either way. If gold and silver break out to the upside, I would expect this to burst back at least to the top of the range. If gold and silver go to the upside and this breaks out to the downside, something went wrong, but it's definitely a possibility. So let's see how it plays out. But Obviously, I took a position in it, so looks good to me. SILJ, Silver Junior, we're basically just hanging out at that resistance. This looks basically exactly like the actual silver chart. And this is typically going to give us a junior minor like leveraged position in relation to like the underlying. So, you guys know how I feel about these mining stocks. I love them. And if gold and silver do break out to the upside and we start to see these massive moves, I would expect these to just completely overperform. Yeah, and we'll have to see how it plays out. I mean, if we get that retest back up to this like crazy little like island reversal, maybe. Do we get rejected from this range? And this is like basically a triple top right here with like this one little like outlier. That seems more likely to me. Really, it's quadruple top because we have a top, a top, a top, a top. It's gonna be tough. It's gonna be very, very tough to get through this level. But if we do, I mean, there's definitely some massive potential. And again, we can do that same type of thing where, we basically have a flag pattern at the top of a bullish trend. So, what are we going to get? The move from the bottom to the top. And again, there's lots of ways you can do these measure moves. You can do the length of the flagpole that led into the position. So you could do from here to here as the length of our measure move when we break that. I prefer to do like conservative measure moves. So the conservative measure move on a breakout from this level is going to take us up to like the 1.5 to 1.618, which is going to be around like 20 bucks, roughly 20 bucks. We're at 17 right now though. This is not going to be like a make or break that gets you rich. Now, if you want this measure move, it's a whole different ball game. That's going to take us up to, and again, it's going to take us basically up to 2.618 at 30 bucks. So 100%. But again, you're not going to, let's be real here. No one's getting rich off either one of these measurements. AG, this is First Majestic. We hit my targets down here. I took some buys. Since then, it's basically just been like kind of hanging out. This island reversal back here, like topping pattern, essentially led to, a second rejection, lower high, lower highs. This could easily still break to the downside. Again, we're getting kind of mixed signals from the gold and silver chart and then the gold to silver ratio. There's a lot of ways it could play out. We did get the multiple green histograms. We did get the blue slope line. We did get the hard buy signal out of the bearish control zone, off of support, off of, basically our key area that we're looking to accumulate. So, of course, I'm building a position. We'll have to see how it plays out. From our bottom to our 1, to our 2 retracement, to our 3 third wave, to our 4 retracement, which we basically have already played out. I would have liked to see it get a little more bearish, but I know like the silver cult is like strong right now. So I'm not surprised that we had like an underperforming sell-off on this. But in all reality, the measure move breakout of this is going to take us up to essentially between the 1.0 and 1.236. I would expect like $37. We'll have to see how it plays out though. It's easily going to overperform that in the long run if silver and gold start putting in like new highs or breaking out. But again, First Majestic has this on the monthly, a massive, massive flag pattern. So, we basically had our bottom back here at $1, our top up here at $17. This goes back to 2009, the bottom of the pattern, and the top of the pattern was 2011. So that was 2-year run up, followed by April 2011 to October 2015. So, 4 years to the downside, followed by, a few months back to the upside, followed by a couple more years back to the downside. We have finally broken out now from this pattern. We got that massive move to the upside, at which point in time, I told you guys I was selling First Majestic, taking profits, and then I was waiting for the retest of the breakout. We came back down to the breakout level, that purple resistance line, found support on it. We're now moving to the upside. What does that tell me is going to happen? Based on, our targets and everything, I would expect the breakout and the fifth wave to play out. Now, in all reality, though, could we, just to see, what's our potential move to the upside? Oh, wait, I think that's the one I already have in place, isn't it? Yeah, I think that's the one. Yep, exactly. That's going to take us back to our target right there. So you know, based on Fibonacci extensions and whatnot. And when you look at it on the monthly, like, that doesn't look too unrealistic that we could get like one more little push up here. You know, and most of these moves to the upside, this one was like 2 years. This one was, you know, the better part of a year, you know, from the bottom right here or from the bottom right here. That lasted for a few months to a year. So could we get another year of bullishness in silver or multiple years of bullishness in silver? You know, including like our mining stocks, 100%. 100%. But we could easily just roll back over and sell back off here too. So, but I doubt it. Pot stocks, THCX. This is one of the ETFs for marijuana, cannabis, whatever. Told you last week that I was starting to nibble back into these things after taking profits on our little blow off top situation right here. But again, I'm looking at this as like a 1, a 2, a 3, a 4 is taking place right now. Selling back off. Don't want to see it come lower than 12 bucks. So could we still have a couple bucks to the downside? Could we easily get down to like 13.50 on THCX? 100%. 100%. We definitely could. But if we look at our Fibonacci extensions, potential targets back to the upside, and you know, I would expect this thing to just, you know, absolutely explode. And you know, we can do actually, because I don't have, what do I have in place right now? Yeah, let's do the Fibonacci extensions, and we can just kind of get an idea. So, all right, so the way I usually do this is I will take from the bottom of the range to the top of the first wave. All right, so that's our Fibonacci. Let me make that something bright. I'm going to make it white. So from the bottom to the top right here, and then we're going to check our retrace. The retrace was to the 0.5, okay? So we had a 50% retrace from our wave 1. So now we'll do the same thing for the wave 3. So this is the bottom of the 2 to the top of the 3. And then look, we've made it to our 0.5. So assuming we do the exact same thing, that would tell us that we have already bottomed out, which is good. You know, it tells us that the potential to the upside is more likely than not. So now let's do the opposite. Let's see our Fibonacci extension target. So we're going to take from the top of the 1 to the bottom of the 2, and that's going to give us our Fibonacci extension. So for the Fibonacci extension from the 1 to the 2 is going to give us our target for the 3. We overshot the 2.618 on that one. Fairly decent overshot, but did not quite make it up to the 3.618. Better part of the way there though, which is good. Pretty bullish. I like to always see it top out between the 2.618 and 3.618, me personally. And then finally, if we assume that this move is done and we take from the top of what I'm calling the 3 to the bottom of what I'm calling the 4, we would expect our Fibonacci extension target to take us up once again between, you know, the 1.618, $50, the 2.618 is $100, and the 3.618 is $217. So, you know, any one of those targets is pretty juicy from 15, 16 bucks. We're also finding support at our 200 exponential on simple moving averages in a very clear uptrend on the daily, but we are flattening out. So could we break down from these levels? For sure. Do I expect us to break lower than like that $12, $13, $14? No, I don't. I really would like to see this thing find support somewhere around this range to like 20 or 30% down, and then see that massive move to the upside. So, which I think is likely. I think it's very likely. So, you know, assuming we were taking our buy off of the 0.5 at this region, and we wanted to say, let's say we were going to put in our, I don't want to put a crazy situation in because I really would just be buying more at a lower price. But let's say a 15% stop loss back to just like our modest 1.618 Fibonacci extension target. You know, I'm looking at basically a 222% move to the upside with our 15% stop loss. You know, and obviously sounds crazy, but these are the ones we look for. This is what happens when you buy stuff when it's on sale versus buying it at the highs. You know, stuff looks crazy because you think, oh, am I really going to get 200% move to the upside? Yep, maybe. Maybe not. The 2.618 is a 569% move to the upside. So, you know, do I like risk reward ratios of 15 to 1? Do I like risk reward ratios of 40 to 1? I'm not even going to answer that. I ain't got to tell you because you already know. YOLO, not only do we love the name, but also the stonk. ETF, this is the pure cannabis ETF. You know, similar type thing. Gives you a little exposure to one thing I like about the ETFs is in the actual cannabis space, you have obviously like the THC portion, like the legal weed. Then you have also like the CBD portion, which is like the painkiller, like actual, like not a drug, like a actual like medicinal purposes portion without like, the feel good, or I guess the highness. So you don't get high, but you feel good versus you get high and feel good. I don't know. I don't know how to compare THC to CBD, but essentially it gives you exposure to not only THC and CBD, but then also you have those two branches of it. But then you have like your dispensaries, you have your farms, you have your like, some of these ETFs have like grow supplies in them as far as like lights and all. There's just so many different things that you're not going to get exposure to with like something like just buying Tilray or buying Aurora or, one of the other big names. So that's why I like the ETFs in this space. You get so much more actual diversity in these funds than you're getting with like just the specific like stocks. So, but again, finding support at the 200s. We're in basically an overall long-term bullish pattern. We have a bearish retracement pattern or a consolidation pattern, at which point in time, if we get our breakout, it's just our measure move from, the bottom of the range to the top of the range. So, depending where we break out from, you would expect us to get back up to like 25 bucks or so, which obviously after the last couple that we just looked at is relatively conservative. But if we come down from our top at 31 bucks and let's say we bottom here, which I'm not sure we do, but we are filling out this pattern, pretty nicely. Let's say we bottom. Let's say we get the breakout from 20 bucks. That would take us back up to the 618, which would put us at like that $25, $26 range. But it would still be an internal retracement. But again, when we're in a bullish uptrend, I look at the 200 exponential and simple moving averages as a buying opportunity, typically. Not always the case though, if I'm seeing like other warning signs telling me. But there we have YOLO, and then we've got Tilray specifically. You guys know, I told you last week, or what was it, a couple days ago, that I was buying Tilray, Aurora, YOLO, and THCX. So, and then obviously I told you about USAS and Cameco. I like to let you guys know when I'm buying, but not like real time. Obviously not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. But, people always ask me like, what am I interested in? What am I looking at? Well, I'm looking at all these things, but what am I actually like building positions in? Well, now you know. Tilray is basically in that same like descending wedge pattern. We have also inside of that wedge pattern, I've left out this like blow off top right here because it was like just absolutely ridiculous, and I feel like that was like Reddit trader fueled. So in all reality, I have basically this is just the Elliott or Elliott wave structure 3 right there, that blue line. The real resistance is that red line that we have right here. Matter of fact, let me turn off the moving averages. It's that red line that we have right here. So we have a top, we have a top, we have a top. And then we're back at the top again. So do we get rejected from here and come back down to the bottom? Yeah, it's definitely a possibility. But in all reality, what's happening is, we have this very clear support here in blue, very clear resistance here in red. And the more time we test the support or the resistance, more likely it is to break. This range is getting tight, very, very tight. And it's at my key retracement level based on all these Fibonacci levels, which I'm not going to get into. You guys know how I do it. I do, the wave 1, the pullback, the wave 3, the pullback, and then, exponential targets based on my Fibonacci extensions, which is going to give us from our potential entry point, or in my case, the actual entry point, either a move up to $105, a move up to $310, which is the previous all-time high, or our wave 5 measured move Fibonacci extension of 2.618 is over $1,000. So, when this thing hits $1,000 and, we bought in at 15 bucks, just remember your boy. We'll all meet up in the Caribbean for a millionaire getaway vacation and enjoy our pot stock gains. So that's Tilray. ACB is next. I don't like to do this had like that, what was it? Like the 6-to-1 stock reverse split garbage. They got bought out, whatever. So I don't like doing the targets in the same way on this. But essentially, we have a very clear inverse head and shoulders pattern playing out. We could still have that shoulder get down lower, as low as like $5, but I think this thing is probably like bottoming out in this range. And the truth is, what's the difference between buying at $7 or buying at $5? It like not that much. I mean, 50% maybe you could argue it that way, or 30% or whatever if we have that drawdown. But the truth is like, with the target to the upside of like $33 or $67. I mean, if you buy at $7 and it goes down $2 and then it goes up, $27, who cares about your $2 if it went up $27? So we have a 27% risk potential here with a 377% reward or 832% reward internal retracement back to the 786, which has given us, again, ridiculous risk reward ratios, of 16 to 1 and 32 to 1. And again, this is the difference between buying value or buying things that have already gone parabolic. These are like putting in bottoming patterns after parabolic runs that are like still somewhat correlated, but not completely correlated in the same way that like traditional stocks are. Like tech was putting in all-time highs while this thing is putting in like cycle lows, like corresponding. And that's what I like to see. I like to rotate out of the things I absolutely crushed it on, like Tesla and tech and all this stuff. And then I like to rotate into the value stocks that are undervalued. And what sector is undervalued? Commodities. And, I mean, I don't got to tell you all the stuff we look at. These are the most bullish, in my opinion, potential values. That's like this whole sector: the gold, the silver, the platinum, the uranium, all the mining stocks, the pot stocks. And then last but not least, obviously does not fit into this range here, but Caterpillar. Caterpillar, we bought the support right here, moved back up, got rejected at that key Fibonacci level. I've been paying attention to, this as our potential top. I'm not going to call it out and say this is the top. I expect us to get up to the 1.618 and top out there, but it's very likely we top out at the 1.5 and that's it. And Caterpillar has like a nice breakdown, like pullback target. It's definitely a possibility. But the truth is, we have a very clear defined range, and this is one of the most bullish charts that there is. It's making all-time highs and it's doing it powerfully. I love Caterpillar. It looks phenomenal. Fundamentally, it looks phenomenal. Everything's great about this. And people ask all the time or wonder or think in their heads but don't say it, and they think, what do I want to, what do I buy long? What can I get for like that 30-year trade? What do I put money in like that's still going to be around in 20 years that's going to be a good bet? Like, because I don't know if Bitcoin's going to be around and crushing it in 30 years. It's only 10 years old. I don't know what it's going to look like in 30 years. I don't know what it's going to look like, at retirement age. But when we look at a chart like this, we look at the old caterpillar turning into a freaking butterfly. Let's go back to 1968, okay? Let's look at what this thing did for the last 50 years. What did it do? It went up for 50 freaking years, all right? So this is something I'm comfortable with in a long-term trade. This is something I'm comfortable, putting into a long-term portfolio. This is something that, well, you get the point. You guys get the point. I like to reiterate, but I mean, if you're looking for like an IRA, or if I'm looking for something to put in my IRA confidently that I'm not going to get scared if we have a little sell-off on, I'm going to pick something like this. Something with a long history, consistently putting in, higher highs, higher lows, something that looks strong. Could we still have a crazy drawdown like this? For sure, man. For sure. We definitely could. This was from May of 2008 to February of 2009. So could you have been upside down in this thing for a year and lost 75% of its value? 100%. But are you going to capitulate out of this, or are you going to be buying more along the way? Because like me personally, I'm going to be buying more along the way because I know long term, unless something changes, Caterpillar's just going to keep going up because that's what it does. And it's also crucial for like infrastructure, building stuff. And who doesn't like diesel powered big yellow machines? I do. I like them. But yeah, that's Caterpillar. And then LBS, I wanted to look at lumber. Lumber futures. I know this is like big talk of the town, everything, da da da. I told you guys when lumber was topping out right here at 925. I told you we were going to break through it and put in new highs. I told you lumber was topping out again, and now what happened? Oh, look, lumber topped out. So it's sold off from 1720 to basically a gap back down to 1194. Come back up. We filled actually the gap was right here. So we took out that candle, came back, filled this gap, that previous gap. What do I expect to happen? I expect to sell off. We're on the daily 821 crossing to the downside. But what you have to pay attention to on these is the expiration, okay? Because these cycles have to do with expiration of the actual futures contracts, because most people that are, I shouldn't say most people that are trading lumber futures don't want lumber deliveries, don't want oil deliveries. So it creates pressure as these contracts come towards expiration. Like, matter of fact, responsible like traders don't you don't have the ability to take delivery on like lumber or oil or gold. Normal people don't have the ability to do that. So there's actually restrictions on when you can even trade these futures contracts. So it creates pressure because the traders have to get out and get out of the way for like real people that are like using this to essentially like hedge their lumber inventory, etc. So you're going to see situations like this happen often where something tops out cyclically, like time cycle wise, based on like expiration. As it gets closer and closer to expiration, people are going to run out of this thing because they are not allowed to trade it towards expiration, or they don't want delivery of barrels full of oil. So, you got to take this stuff with a grain of salt. But, lumber was in a downtrend and then broke to an uptrend at $400 back in June of last year, basically, and then started like essentially like overperforming since then, putting in all-time highs from $650. Now, am I going to get like bearish on lumber? Like, do I think lumber is going to go back down and never be expensive again? No, but there's a lot of fundamental forces driving the price of lumber up. Supply constraints, basically like speculation on I shouldn't say completely speculation, but a lot of this is supply constraint, like lack of supply, because one, lumber yards or like operations were halted because one, restrictions during the pandemic, two, like what people speculated was going to be a lack of demand. People thought when everything was crashing, like nobody's going to want lumber anymore because like the whole world's ending. No one's going to build anything. And then they were completely wrong. And so we had limited supply. And then on top of that, we had excess demand because people are like, well, I'm stuck at home. I might as well build a deck or a barn or, remodel the house or build a new house or whatever. So this created like basically this parabolic run up. It's not unrealistic to think this is going to get back down to like $950 or something like that, or maybe even sells off lower. But in all reality, I'm looking at this as like a wave one, a wave two. This is our wave three. Maybe our wave four comes back down to like $900, something like that, and then we get a wave five to the upside. So is it unrealistic to think lumber's going to keep going massively parabolic? I don't think so. But could it top out here and consolidate or sell off or whatever? It definitely could. It definitely could. But you have to keep in mind too that this chart can be deceptive because of like the actual futures delivery. In the same way that oil goes negative, it's not like someone is literally paying you to take oil. It's basically because people are like, oh shit, I'm still in an oil contract. It's going down. I'm trying to get out of this contract, but it's just going down. So eventually people literally are saying, well, I can't take delivery on this, so I have to sell it at any price necessary. So oil like barrels go negative because somebody has to actually take delivery on the oil and there's nowhere to put it because everything was full at the time. So that's what led it to be negative. Now, is that ever going to happen on lumber? No, it's not. Because you can just store lumber anywhere on the side of the road. You can dump it. You're not going to pay someone to take it. But that's not the case with oil, So, but it's important, I think, to pay attention to like the cycles of lumber too, because this was the bottom in April 2020. This was the bottom in October 2020. This was the top here in September 2020. This was the top here in May 2020. So can you start looking at something like a time cycle analysis tool or something like that? 100% can. Oops. Oh, there it is. So, you know, essentially if we look at where's the bottom right here, and then we just draw a time cycle to the next bottom, okay, right there. And then that'll be our blue one. And then let's do one more time cycle, and then we'll do from our tops. So here's our top, and then let's look at our next top right here, and let's look and see if we could see any kind of like pattern or correlation or anything. Well, what does that tell us? We obviously have only 2 points of reference based on this, but it tells us, you know, that basically this is going to bottom out in June of 2021, and then our next lumber cycle is going to, you know, top out basically in January of 2022. So, you know, could this basically sell off for, you know, a month or so right here and then go parabolic again like it did here, for sure, 100%. And then once again, you know, if we want to do like a Fibonacci extension, what happened? So from the, oh, I already had that one in, whoops. So from the bottom right here at $250 to our top right here at $935, we sell off to the 0.5. So 50% retracement, Charles Dow theory. What? How crazy is that? And then we do once again from our bottom at the 0.5 to our top right here at like 1700 or whatever it was. You know, 0.5 retracement. Is it realistic to think that we could like sell back off and retest the previous high at 930, which also corresponds with our 50% retracement at 900? 100%. Now, what is that going to look like on the chart? It's going to look like a pretty violent sell-off, you know, but is it going to look any more violent than what's already taken place? Not really. Not really. And then once again, if we look at our Fibonacci extension targets from the top of the 1 to the, all right, I'm about to get rid of these because that's way too many. So from the top of the 1 to the bottom of the 2, that's going to give us our Fibonacci extension just over the 1.786. So then if we hypothetically take from the top right here to our potential bottom, which is that previous top we just talked about right here, where's the 1.786 going to be at? That's going to be exactly at the 2.618 of the previous wave, which is going to give us a potential top of $2,725. So that's a 100% move from this previous top. Like, is that realistic? I mean, historically, based on our last couple moves, yeah, it is. It's 100% realistic. But, you know, we'll have to see how it all plays out. But in all reality, you know, that's my target. And then, you know, based on, and again, the hardest thing you can ever do is try to figure out time cycle analysis. That's the hardest thing to do because it's easy to pick up or down or whatever, but it's hard to put it into a time frame. So in all reality, you know, if we have now a target based on our Fibonacci extensions, I'm going to get rid of these extensions just to clean it up a little bit. Now we have both a target based on Fibonacci extensions, a price target, and then based on our time cycle analysis, which we're only using 2 points, so it's probably not going to be that accurate. And then also we have correspondence between the top and the bottom, which is not likely to happen. We're probably not going to top out, you know, and then bottom out like a week later, but maybe we do. I don't know. But that's January 2022. So, you know, maybe this thing tops out in January 22 at $2,725. And then you can start calling me like the Oracle of Wood or like the, I don't even know. You can come up with a funny name and post it in chat if you think of something. But, you know, I mean, essentially that's what it comes down to. Lumber and a little time cycle analysis, something I do not use often publicly, but I do use myself. And then last but not least for today, how are we doing on time, by the way? Oh, 1:33. We are ripping, guys. We're crushing it. Still got to look at that crypto too. Copper on the daily. Copper had a nice little gap down here from, you know, the high, but zoom out here and, you know, what did we do? Copper put in a new all-time high, and this is CPER, copper index. Topped out basically new high based on a wick, came back down and found support on that previous high. We really got to see what happens in the next like 9 days at the end of the month and see, because this looks obviously right now fairly bearish. It looks like a rejection candle at the top of the range. But we'll have to see how it plays out. It's not unrealistic to think that we burst through it, get rejected, sell back off to a key level, and then continue to the upside after a parabolic run. But where's the downside target going to take us to? Well, if this is a 1 and that's a 2, and then we're in the middle of the 3 right now, come back down to the 4, it's going to put us around like 21 bucks. So assuming we were going to say this is like topping out where it's at right now, where do we expect our next potential entry on copper? I would like to buy it at $21, not at $28. I know that idiots out there are like, I'm buying copper because all-time highs, and we bought copper today because it had a pullback, and I'm bullish on copper because infrastructure. Yes, I totally agree with all those things, but again, I don't have to explain to you why I don't like buying things after they've already gone parabolic. And not to mention like things like copper and uranium, everybody is so bullish on right now. And the same way the crypto trade was overcrowded, and I said, bye-bye, no longer interested. I feel the same way about copper and uranium in the short term. Bye-bye, no longer interested. Not buying things, when they're about to top out and get crushed. I'm going to jump in the comments real quick, and then we'll jump into our crypto. And I'm going to try not to be too obnoxious with my told you so's, but Publi says, I'll send you a joint when Tilray hits the 2.618. Hey, thanks, bro. Master Splinter. That's awesome, dude. Yeah, that's awesome. I love it. Master Splinter. The Oracle of Wood. Oh, that's funny. All right, let's just rip through Bitcoin, and we should be able to, or crypto, and we should be able to keep this at the 2-hour mark. So, that's funny, dude. Good job on that one. Matter of fact, I'm gonna grab a drink really quick, so give me like 2 seconds. All right, all right. We're back. Okay, so all right. So we did a little breakdown on Wednesday. And what did we talk about on Wednesday? We talked about topping patterns. We talked about the 2 ways things top and bottom out. We talked about parabolic blow off tops, and then we talked about rounding bottoms. We talked about, why and how to recognize those things and the distinction between the two. Well, you guys know, what do I use to call a top? I like to see, and we spoke about this weeks ago after we put in this what looked like it was going to be a bearish candle and then wasn't. That was what? We've still got, on the monthly, we have 12 days left. So we spoke about this like 12 days ago when we got this candle close. 2 weeks ago. And I said, that's a good, because what I don't want to see is, I don't want to see the low take out the candle before it, that green candle before it. So what did I say? Once we come down here and take out that low, I'm extremely bearish. And, excuse me, that looks like a topping pattern. The same way that here, we got, basically a rejection wick at the top of the range. And then the next wick took out the low, basically sold off bearishly the entire candle. And that's it. That's a topping pattern. We're done. And then after that, took out the parabolic SAR, flipped over red, sold off 90% of our value, finally bottomed out. We got a rounding bottom right here. This is accumulation taking place in the same way that, in my opinion, on a shorter time frame, this is distribution taking place. Specifically spoke about the bullish control zone, getting the hard sells, we exit it, and here we are in the bullish control zone. And what does it look like it's about to happen? Looks like we're about to leave the bullish control zone and get the hard sell. So, again, maybe this all gets bought back up, and then we go to new all-time highs, and Bitcoin hits 100 gazillion trillion billion dollars, and everybody can tell me that I'm dumb and I don't know what I'm talking about. But until then, looks like I'm right, because we just had a over 50% sell-off, and I told you about it ahead of time. We also have just put in our first red histogram on the parabolic SAR, or on the TJD, TDMACD, same way that we had no red histograms the entire bull run of 2015 to 2017 blow off top. We then had no red histograms from our bottom, capitulation event right here, which again I called the capitulation event, which again I called the capitulation event, which again I called the topping out, which again I called the topping out. So I basically have nailed the absolute top, the absolute bottom, the absolute top, the absolute bottom, and now here we are once again at the absolute top. So maybe I'll be wrong this time. Maybe I'll be wrong. But first red histogram. Warning. Danger, Will Robinson. So here we can see a little more clear on the weekly. Blow off top. Rounding bottom. Rounding top. V bottom. Or, you know, the opposite of a blow off top. And now here we are. Rounding top. What does that mean? And how did I recognize it? Well, what that means is this is Wyckoff accumulation right here. This is Wyckoff distribution right here. And what have I been telling you guys about this whole time when we were just sitting up here while the altcoins were going parabolic and most of them putting in new highs, except for the really shitty ones like XRP? Well, what did I tell you? This is distribution taking place. Distribution. And what does it look like? Like, I mean, it's not pretty, but essentially this is a shoulder. That's a neckline. That's a head. That's a neckline. That's a shoulder. And then what do we expect the measure move breakdown from the head? This is about to get ugly. Oh, it's not too bad. From the head to the neckline. And that's our measure move breakdown from the neckline. And where does that take us down to? Oh, exactly where we went to. And where does that just so happen to correspond with? Oh, look, also our parabolic support line, the one we spoke about in our last couple of videos. Also, the exact target of the 55 and 50 exponential and simple moving averages. So did we bottom out now? Are we done? I don't know. Maybe, maybe not. I don't think so, though. I think this looks like total shit. I think this chart looks like death. You know, we basically hung out at the top of a range at a key level, and then we broke down from that range with an extremely bearish candle. And then what happened after that? We got extremely bearish candle follow through. Now, again, we still have 3 days on this weekly candle. Maybe it gets bought back up completely and leaves this massive wick, and then we just like consolidate here, and then who knows what's going to happen after that. But right now, it sure doesn't look good. I mean, but it didn't look good before, depending who you talk to. Oh, and also, you know, once again, hard sell, hard buy, hard sell, exit the bullish control zone. What does that mean? Oh, it means that we got out at $60,000. And what did I tell you was going to be the top of this bull run, at least temporarily? I told you guys, 64,000 was my top. I took profits at 64,000. I took profits again at 60,000. I took profits again at 56,000. And now here we are at 37,000. So what options do I have now? I had the option now to buy back a bunch of Bitcoin way cheaper. Hodlers had the option now to hodl. People that were all in had the option now to still be all in, but lose half of their value. Me? No, I don't play that game. So, you know, I can deploy capital whenever I want throughout this range, from anywhere from 30,000 to 40,000. Now, am I just jumping back into this? Am I super bullish on Bitcoin now because the wick got bought up by a few $1,000s? No, only idiots in the crypto space, only the stupid people who don't understand technical analysis are like, yeah, we had a 50% sell-off, but we're already up 33%. Like, that's what I hear people saying. We may be off of the highs by 50%. We might have had a over 50% dump, but we're back up now 33%. So we only have another 17% to go. Well, it doesn't work like that, okay? We're down over 50%. So to get back to new highs, we need to have a 100% move. 117% now, back to all-time highs. So now that's a double up. So a 50% to the downside equals 100% to the upside. Not to mention, from where we're at right now to where we topped out right here for the last, this is the weekly, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. Anyone that bought Bitcoin in the last 16 weeks, anybody that bought Bitcoin in 2021 is now upside down on their position. They are now underwater on their position. Everyone new that joined in the last 4 months, everybody new in Bitcoin in 2021 is now upside down. So now we have a massive 4-month period of people who bought into this that are now all upside down. So what does that create? It creates a ton of overhead resistance, selling pressure. We had none of that this whole way up. there was nothing. Once we got above $20,000, there was no resistance, no resistance. And then here we had, 1, 2, 3 weeks basically of resistance, broke through that. Great. No more resistance. And then underperforming breakout, pathetic, 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 dump. Told you so. So that's what I'm looking at. Bunch of red histograms in a row. What did I say specifically right here? I expect us to bounce a key support level, a key support level, and a key support level. So here we are, bunch of red histograms in a row, about to bounce that blue support line right here, get a push back up, and then if that fails, which I think most likely is going to happen, what's going to happen? We break through that, and then eventually we flip this over red, and we get continuation to the downside. Now let's go with the daily. We put in week after week after week, or I'm sorry, well, it is week after week, but it's on the daily chart of bearish divergence. We had 1, 2, 3 drives of triple bearish divergence. We had 1, 2, 3 drives of triple bearish divergence. 1, 2, 3 drives of triple bearish divergence. Hello, McFly. I mean, how much more obvious can it get, guy? We broke down from a key support line, this green parabolic support line. We crossed the 8 and 21 moving average to the downside. I mean, even if you were like behind the trend, you should have been out of Bitcoin at $56,000. I mean, it's easy. Come on. Breakdown, found support at the 200 exponential moving average. And of course, what did I say at the 200 exponential moving average? I don't want to see us break down to a key support level and then not have a reaction rally off of it. So that looks extremely bearish to me. So why does it look bearish? Well, you would expect the first time we hit that, everybody steps in and buys it, and then we move back up to the upside. Unless there's been massive amounts of distribution taking place, unless there's a bunch of institutional money. Okay, because let me tell you about institutions. Institutions are not hodlers. Institutions are smart money for a reason. People are hodlers because they fall in love. Institutions don't fall in love. They try to make money. Well, they're not supposed to. Everything was bearish here. Everything was obvious here, and this was a clear distribution pattern, a clear topping pattern. The moving averages tell us we were topping out. The divergence told us we were topping out. Put that one on the list of lessons learned because you don't want to make this mistake twice. I'll tell you that much. Again, not financial advice. I'm not your financial advisors. Markets are extremely volatile. Please do your own research. Trade responsibly. We are now inside of the bearish control zone for the first time since $10,000. And before that, we were in a massive bear trend. This was all basically like a bearish consolidation pattern. We had like a little mini underperforming bull run right here or whatever. But look how many times we entered into the bearish control zone. All these little green blips on here. And then we did not touch the bearish control zone from that capitulation event right here until that one sell-off, Head and Shoulders, which all the group members know about that because we absolutely crushed it on that one. And then from then, the bears have never been in control again. From $10,000 to $60,000, the bears were not in control. And now, who's your daddy? The bears. The bears are in control. So do we want to just buy the dip? Let's buy the dip. All the people that were buying the dip at 50,000 and buying the dip at 42,000 and buying the dip at 30,000. You can't just buy every dip when the trend changes because that's how you end up holding bags from $20,000 for multiple years while we go through a bear market. Am I saying that we're entering a bear market? Well, technically, depending on how you look at it, we already did. But I don't necessarily think that we're now going into a long consolidation sell-off period. But, I mean, I wouldn't put it past us. We're very clearly under the 200 exponential and 200 simple moving averages. And what's the slope look like on them? Well, it looks flat. It's still technically to the upside, but barely. So if we're underneath the 200 exponential and simple moving average and the slope is flat or down, what does that tell me? It tells me we're now in a bearish trend. I'm not interested in this asset while we're under the 200 exponential moving averages, 200 simple moving averages, because essentially this is where we broke down previously. And, that was our like V bottom. That's not usually how it happens. A lot of times you break down from them and you get a situation like this where months go by and you're underneath them. And then you finally do break back above and then you go back below them. And then you finally do break above them. And then you can start finding support again and start getting them angled to the upside. So as far as I'm concerned now, this looks like the top, at least temporarily. Could we push back up to 42,000? Yes. Could we push back up to 50,000? Yes. But I think it's going to be, I mean, statistically, it's selling opportunity. Anybody now, any price action to the upside is going to have tons of people just trying to get out of their positions, either even or in profit or at less of a loss. But there is just month after month after month of selling pressure above our heads now. So now let's switch over to next Bitcoin chart. This one is Bitstamp. And once again, you can very clearly see, you know, we talked about the breakdown from the yellow trend line in the retest. We talked about the breakdown from the blue trend line in the retest. We talked about the channel that we were forming. We even took a long back to the upside off of our measure move of the channel. We specifically talked about how this was the top and we weren't going to go back above 60,000, bearish divergence, all that good stuff. And then from then, we started building a momentum to the downside. We flipped over the slope line blue right here and started putting in multiple red and orange bars. What does that mean? It means the trend is strengthening when it's blue, and when they're red and orange, it means it's down. So if we're going down and the trend is strengthening, and then the slope of the trend tells you how much it's strengthening, and the size of the bars tells you how much volume is coming in, what does that tell you? It tells you that this is still a strong trending downtrend. So what was this? This was a reaction rally, attempt to push back up, measure move of the breakout, followed by another, you know, basically capitulation event, followed by a dead cat bounce reaction rally off of key support at the 886, off of key support at the 30,000 level, which was our target based on this previous consolidation period right here. So we said if we broke down below 42,000, our next target was 30,000. And if we break down from 30,000, what would that look like? Well, it's just going to look like even bigger topping pattern because we're going to have basically a neckline, a left shoulder, a neckline, a head. And then we come back down here to the neckline. We get a reaction rally back up to the resistance breakdown. That's going to give us our right shoulder. We come back down to the neckline again. We retest key support. And then if we break down from that, it's going to give us an even further measure move back to the downside, which is going to take us from the top of the range down to, so top of the head down to the neckline. And then we can extrapolate that from the neckline to the downside, which once again, because we're on log scale, is unrealistic at best. But where does that take Bitcoin to? Take it so far down below the earth that it goes actually to zero and then ends up on the other end of the globe. And where's that at? China. China. But obviously that's not realistic. So is Bitcoin going to zero? Probably not. But could it? I mean, technically. But regardless, I mean, if this didn't look toppy when we were up here and it doesn't look toppy now, then you should probably, I mean, I'm not going to give you financial advice, but you should probably get your head checked out because you may have a concussion. You're probably delusional. You may have hit your head on the moon and got knocked back down to earth because this looks super toppy. Now, again, we could find support here, consolidate, find support here, and then boom, to a new all-time high, and I would not be surprised. But again, you know, look at this chart. A bunch of green volume, and then we top out. A bunch of red volume, and we bottom out. A bunch of green volume, and we top out. A bunch of red volume, and we bottom out. Green volume top, red volume bottom. Red volume again, bottom, bounce. Red volume again, bottom. More volume than we have seen in this entire trend, with the exception of this one big one right here. And what happened after that? It was a reaction rally that got bought back up to a lower high and then proceeded lower. So look at this volume right here. Reaction rally back up to a, you know, lower high. I don't know how low it's going to go. Probably at least, I think it's going to get back up to 42,000. Does it get back up to 50? I doubt it, but it could. At which point in time, what do you expect to happen? Continuation and further downside. So we overshot, came back down. Where would that put us at? Back at the neckline, back at our key support right here. At which point in time, I'm going to look at this as a buying opportunity, you know, for a potential long trade back to the upside. Now, there's a lot of people out there calling for a 20,000 retest, okay? And I want to talk about that. So obviously, this is our daily chart. I'm going to switch over to the weekly, and we can talk about it while we're here. This is our most important trend line, in my opinion. You know, it goes back to 2013, and, you know, we spent most time above it, finding support. Sometimes we dip below it slightly, you know, back above it, parabolic, come back down, find support. Nice little push up here, dip below it slightly, come back up, parabolic. So historically, what happens? We revert to the mean. Okay. And you can draw this back further, back to here. And essentially it was like the way back to here, if you want to, So in all reality, what do we expect to happen? A reversion to the mean. So where's the mean at? The mean is at $15,750. Okay. If we come back down here, maybe we take a while to get there and it comes back down to like 20,000. All right. Which obviously, I told you guys that this was my entry point that I was looking for a sell-off to, and we hit it. We came back down to it perfectly. So my next one is down here at like 20,000. Now here's the problem and what I don't want to see happen. I don't want to see Bitcoin go back down to $20,000. Why not? You can just buy more. That's great. Well, because that's something that we've never done before. All right. This is our parabolic top right here in November of 2013. Okay. This is our parabolic top right here in December of 2017. All right. So when we topped out right here, that was at like $1,200. Okay. Bitcoin comes up and comes back down to like 3,000. It does not even get close to that 1,300 previous high. Okay. Previous high before that was, you go back into like the previous highs and we never come back down and retest it unless we have like a two-phase bull run like we did here, where we come up, top out, come up again, then we retested it. But this is a single bull run, a single 4-year halvening cycle right here. That's what I'm paying attention to, is like the halvening cycle. This is the single halvening cycle from the bottom to the top, or from the halvening to the next halvening. The next halvening cycle from then is this bull run right here. So when we come down from that bull run, we do not get back down to the top of the previous one. Okay, which is bullish. That's fine. That's what you want to see. You find support at a higher level. You don't even need that previous resistance to act as support because it's super bullish. If we come back down here to $20,000, we are retesting that previous bull run high, something we have never done in Bitcoin's very short life cycle and very limited amount of halvening cycles. So that to me is not bullish. I do not want to see Bitcoin back at 20,000. I want to see Bitcoin bottom out at 30 grand and then continue to the upside. But in all reality, what's the likelihood based on how fast we got back down to 30,000? Well, this had a massive sell-off right here. And, and again, I'm using technical analysis based on what's happened previously in our very, very limited, experience with Bitcoin. It had a 70% sell-off and then a nice little push back up, and then put in essentially that descending triangle right here. At which point in time, we eventually capitulated down from that. And everybody was bullish right here. Oh, we're going back up. It's over. Let's go. Blah, 50%. So in all reality, if we compare that to what happened right here, and we get like that 60 to 70% sell-off, that's going to take us back down to the lowest I want to see us go to, like 24,000 right here. This target and one of our Fibonacci extensions to the downside, basically it's like the 382. I don't want to see us sell off lower than that. I don't want to see us retest this high, because then we start doing something we've never done before. And even though normally that's bullish on a chart, if you retest your previous resistance as support, I don't want to start seeing Bitcoin less bullish than it's ever been in the past based on those 4-year halvening cycles, because that's going to be danger to me. So if we get back down to 20,000, I'm going to be less bullish on Bitcoin than if we like bottom out at like 24 to 30,000. So also, what are we seeing here? Well, pretty much here was the highest volume we've ever, it was the highest volume we've ever had, and almost the top, at which point in time we just put divergence, which to me is like a melt up basically. And then we saw peaking volume. And what does that look like? Well, it looks like a shoulder, then it looks like a head, then it looks like a shoulder. Head and shoulder on volume, followed by a sell-off capitulation. And then what did we see? The second highest volume we've ever seen was on this selling candle, this monthly candle, to the downside. Well, why is that? Because half of it's selling and the other half's buying. So you're getting buying and selling taking place. As we're on like these pathetic volume candles, it's just buying. People are just buying. No one's selling, especially once you're above 20,000. There's no reason to sell because you're in a blue sky breakout. So there's even less selling taking place. It's literally just people buying the breakout. I don't like to see this much volume and we still have 3 days left in this weekly candle, because we're probably going to take out this one right here. So is that saying, oh, this is the bottom? Maybe. I don't know, but I don't know. I don't want to see that. We're leaving the bullish control zone. We got the hard sell. We have peaked out here. We peaked out here. Looks very bearish to me. Looks very bearish. So, buy the dip. I'm buying the dip. I'm hodling. I'm a hodler. They're never going to get my corn. Well, have fun holding my bags because I'm not going to hold it. But, we are down here in the bearish control zone, potentially looking for some support here. This is a decent looking candle, decent looking daily candle. 50% of the candle got bought back up. That's decent. It's got a nice wick on the bottom. I would rather have seen this get back up to like 66% of the candle getting bought back up. There's potential. Okay, another very key thing here too that I have not mentioned yet that I would like to bring up that I have not heard anyone else talk about. Of course, people just talk about dumb shit and then they just repeat each other. It's like a bunch of freaking idiots with no brains just repeating each other, and they're just repeating the same idiot shit over and over again. I'm the opposite. I try to think outside the box. What is no one else talking about? What is no one else seeing? From the bottom at 3,000 to the top at 64,500 and whatever. Fibonacci from the bottom to the top, okay? That's our blue one right here. What did we come down to and touch? We got down to the 236. How do you start validating Fibonacci targets? Well, once you reach the 236, you can validate that that is a potential top, and then you're going to see continuation to the downside to our next Fibonacci target. Let's look at another example of that taking place. Previous bull run or halving cycle. How long did it take us to get back down to the 236? We topped out, and then we came down to the 236. We topped out in the end of 2017. We bottomed out at the 236 in February of 2018. So it took us roughly, let's say, what was that, February 5th? So it took us roughly a month from where we topped out, where we put in the all-time high to the bottom right there. So this all-time high was mid-April of 2021. And where are we at right now? Mid-May of 2021. Oh, wow. So 1 month. It took us 1 month of selling off to get to the 236. Okay, well, that's cool. That's a reference point we can pay attention to. What happened after that? We bounced the 236 back up to a key resistance, support zone. This was obviously support, and then when we got back up to it, it was resistance. So, if we bounce back up to a key support that acted as resistance, where is that going to take us back up to? Probably that neckline we've been paying attention to. Where's the neckline at? The 0.5 Fibonacci level right here in green, the potential topping area now. So, now this was potentially a support or potential buy area is now going to act as a potential resistance or sell area. So where does that put us at? Somewhere, in between roughly $40,000 and $43,000, $40,000 and $44,000. Very clearly support here, very clearly resistance here, very clearly support here, very clearly support here. So, now are we going to top out somewhere in that range and then continue selling off? Well, if we do something like this, which is based on algorithms and market makers, probably. So we're probably going to top out right here. Maybe we put in another double top. Maybe we come back down to that same level again and retest it, and then eventually get a capitulation event. Maybe we just sell off immediately lower. I don't know. But realistically, based on that previous bull run top and everything, all these targets, all these potential targets, everything lines up like perfectly, including us selling back off to the potential 382, which would essentially be our capitulation from that descending triangle, like lower highs, same low and lower highs. And then finally we just fall off the table and, capitulate down to the 382, which would be the equivalence of us basically bouncing back up right here. I can draw on here like a little bit of a example. Don't pay attention to the actual Elliott wave like structure. I'm just, a hypothetical kind of idea of what we could expect. Something like this, followed by another one, followed by another one. And then all of a sudden, capitulation event down here. And then from there, reaction rally, and then we start carving out a bottom through here. And then finally, when we break through the key level, we go into our next bull run. And how long is that going to take to happen? Well, you don't know. Is it going to be basically a top out right here at 2017 to a bottom out right here? What was that? December 2018 instead of 2017. So it was about a year from the top to the bottom. So are we going to, have a year basically from our top to our bottom, where's that going to put us at? If we were mid-April right here of 2021, that would be mid-April of 2022. So where's that going to be? This is like mid-April of 2022. And this is our target. And what does that just so happen to line up with perfectly? I mean, it lines up perfectly with this key trend line that Bitcoin has operated on. The reversion to the mean that has worked literally since we had like a chart to look at. This is absolutely beautiful. We spend a little time slightly under it. We go parabolic above it, come back down. I just did that already, so I'm not going to go through it again. But essentially, that would be us basically breaking through this slightly and then coming back up to it, carving out a bottom at essentially a 382 retracement at somewhere around like that $20,000 level. I mean, does that seem likely to me? I mean, based on technical analysis and what happened last time, sure looks good to me. So does this have to be the top? Or is there no way that Bitcoin goes to $250,000? Is there no way we get our $1 million Bitcoin? Of course there's still a possibility. I mean, but in all reality, you want to look at possibility, you want to look at probability. You want to look at what could happen, or you want to look at what's likely to happen. All right, so that's our Fibonacci's, our daily, our trend lines, our CME futures. Let's look at this again too, because our 200 moving average on the daily was different, and I specifically talked about why I didn't love these 200 moving averages. We got a pathetic rally off that 200 moving average, and they're up here at basically between 40,000 and 42,000. Well, what has futures chart been doing us? Telling us the truth. What has the real spot market been doing? Lying to us. False break to the downside, 821 cross. Barely saved the 821 cross. Barely saved the 821 cross. False breakdown, 821 cross. Real breakdown, 821 cross. Let's look at futures. How many false breakdowns did we get? No, 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 no. How many real breakdowns did we get? One. And then what happened after that? Capitulation. So which chart do I trust more? Futures chart. So which 200 moving averages are more substantial to me? 200 exponential right here. 200 simple right here. Oh, wow, look. We came down and touched the 200 simple, and then we closed above the 200 exponential. So are we going to carve out a bottom right here and then start moving back to the upside? I think probably yes. I think we're probably going to get now, some kind of bottoming pattern right here and then continuation back to the upside to a lower high. And if we do, what's going to happen? We're going to come back up to our 89 moving average, top out. And where's that going to be? That's going to be our shoulder of our giant shoulder, head, shoulder breakdown. So there's a lot of stuff, especially when you look at the futures chart, telling me that this is likely to happen. Now, could we come back down here a little bit and consolidate more and then get the push up? 100%. Could we all of a sudden get that parabolic push up and come even higher to like 50,000 and get rejected? 100%. What's most likely to happen? What I just said. I don't think we're going to get an overly bearish move from where we're at now. I don't think we're going to get an overly bullish move from where we're at right now. I think we're going to get a statistically just average attempted retest that fails and sells back off. I think we're probably going to, at some point in time, get a close on the daily, on the futures chart, much closer to like 30,000. I know everybody's extremely bullish right now, and we got this huge wick back up, and this is just a buying opportunity. You'll never get my Bitcoins. I'm a hodler. Well, you're a moron. Realistically, I think that's probably what's going to happen. Again, either of those other situations could happen, but all red histogram still, hard sell signal before the capitulation dump. Well, that worked pretty good. What's going on now? 821 on the weekly. We are very, very below it. We want to see this get above 45,000 or it's going to look very bearish and we're going to get the 821 cross. We got already the weekly parabolic SAR 4 weeks in a row, longer than our 3 weeks in a row back here, which was the longest one we got on this entire bull run up. And from our futures debut right here, when we finally topped out, what happened? We literally got week after week after week after week of bear market. So I want to see this thing turn back around this week and come back up here and take out 65,000, put in a new all-time high, and give us all that moon wood. Because if that doesn't happen, I'm going to continue being extremely bearish on this. We have our divergence signal sell by sell. We have exited the bullish control zone on the weekly. We are headed down hard and fast. And we have all red histograms. We are near the slope line for a reaction rally bounce, at which point in time I would expect us to put in a lower high and fail. Monthly on the futures chart. Look at that monthly candle. That's bullish, right? A big, thick, red candle shooting you in the face is bullish, right? Yeah, I think so. No, we're just, I would expect us to find support on the monthly at like 40,000 above the 8 and then see what happens then. But we're very close now to potentially taking out that green parabolic SAR. You know, at which point in time, where are we going next? 25,000, which is where I want to see this thing bottom out. I do not want to see us going back below this. I honestly don't on that futures chart. And again, we can't really look at any like substantial time frame moving averages or anything, just because futures chart's only a couple years old. So 4 years, not a couple. But all right, I'm gonna rip through some altcoins and then we'll get rolling. What's up, the Shin Chan 2? Good to see you, brother. What's up to you, my man? Change your DP to him. Change your DP to him. I don't know what you mean. I'm sure it's obvious, but I'm missing it. Nah, next thumbnail. That's funny. All right, so let's keep rolling here. Let's look at our ETH chart. Okay, so here's another one. This is going to give us an idea too as to what's going to happen between gold and silver, because gold and silver were telling us the same thing as Bitcoin, Ethereum, but inversely. So let's look at those. Ethereum. How did I know Ethereum was about to get crushed? How did I literally just tell you about this? Well, obviously, I told you guys my target for Ethereum was $4,200. Everyone knows that was our target to the upside. At which point in time, you know, it was very clear that we were topping out, especially when this was staying bullish, and then we finally closed below it, and it looked like we're about to get the 821 cross to the downside, capitulation event. Where did we come down to? The 200 exponential moving average, our previous high back here at $2,000. How many weeks of price action did we wipe out? How many new people got into Ethereum and lost half their money? A lot of people. Failed to get back above the 89 exponential moving average. You know, got nice bullish candles, started selling off again, got a nice little bullish, you know, bounce back up here from that close. Looks like we're getting rejected at the 89, at which point in time, what do I expect to happen? This is our new range on Ethereum between 1800 and, oh, and this is cracking too, so depending on what chart you look at, might not be that aggressive. 1800 to 2500. People are going to be selling into this range right here, in my opinion, and they're going to be buying this range right here. And, you know, that's our range we trade in. Could we bust back up here and test the 50, 55? Could we bust back up here? I mean, I don't think we're going to get back above $3,000 anytime soon on Ethereum. It is possible, but we got to play that one by ear because looks like crap to me. Bunch of red histograms, leaving the bullish control zone, hard sell signal, the cross. I mean, it's not like we didn't see it coming, guys. All right, Ethereum, let's go to the weekly, and then I'm not even going to look at the monthly on Ethereum. We'll keep going. You know, this is our range, basically, is that $2,000 to $2,800. You know, it's just those same moving averages. We just took out our parabolic SAR to the downside. We now have the sell, buy, sell signal. What is that? That's our divergence signal at the bullish control zone. What is going on right here? We have a red histogram and potential peaking of our price action right here. If we get a second red histogram in a row on the weekly, I'm going to be extremely bullish on that, or bearish on this. I mean, I already am. We're about to leave the bullish control zone. We got the divergence signal at the top of the range after a parabolic run up. I mean, come on, guys. Where were we buying Ethereum at? Where were we buying Ethereum at? Right here. Where are we selling Ethereum at? Right here. If that's not enough, well, I mean, what do you want? 3,929%, guys? I mean, what do we want here? I mean, that's not enough. Ethereum's going higher. Because protocols and DeFi and smart contracts. All right, ETH Bitcoin ratio. I mean, okay, so what is this? This is the inverse version of our gold silver ratio. The gold silver ratio is like going in that parabolic downtrend. This is going in a parabolic uptrend. So now we're breaking down from that parabolic uptrend. So what does that mean? It means Ethereum is going to weaken in comparison to Bitcoin, the same way we would expect silver to weaken in comparison to gold. We were in the bullish control zone forever on the Ethereum to Bitcoin ratio. Told us we were bullish on Ethereum since our hard buy here or our hard buy here, somewhere in this range back here. And then look, bullish, 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 blow off top. So now what are we? Bunch of red histograms in a row from the top. This is when 2 red histograms in a row. Hard sell signal, divergence signal, exit the bullish control zone. I mean, what does that tell us? We're no longer bullish on Ethereum. No more Ethereum. Bitcoin dominance chart. All right, what happened? We went lower than I was expecting. I was expecting us to come back down to the 618 and find, support there and move back up. It did not happen. We blew through it. We absolutely decimated it, while shitcoins just absolutely mooned. What did we do? We came down basically slightly below the 786, which is still a respectable retracement. And then look at this giant bullish engulfing candle. Took us back up to the 618 from the 786, from a very clear bearish control zone. Last time we were in the bearish control zone, we got the hard buy, we exited the zone. Bitcoin, went parabolic. It went from, not parabolic, it went like 15% market cap dominance. Okay, so could this be the bottom now? And then Bitcoin starts just rocking and altcoins just start bleeding to death? Yeah, 100%. Could this just be a reaction rally and then we take out this low and Bitcoin goes to 10% market cap and it turns out that SafeMoon really is the future and Dogecoin really is going to change the world and Bitcoin is really just some trash bag piece of crap, old man crypto that's no longer relevant? Maybe it is. Maybe it is. Is it likely though? Yeah, probably not. Probably SafeMoon is a gigantic Ponzi scheme scam. Probably Dogecoin is trash. But maybe like all of a sudden devs start crushing it on Dogecoin and they change the protocol and then they make it actually good and then it goes parabolic. I doubt it though, guys. Come on. Dogecoin is up from, what we were buying Dogecoin at a penny and it went to 70 cents. That's, come on, guys. Let's not get too crazy here. Crypto cap, total market cap. Oh, how did we know that crypto cap was topping out? Sell, buy, sell, exit the bullish control zone. Do you see how easily and perfectly this works every time? And then look, capitulation dump. Oh my gosh, multiple red histograms in a row. Do I want to own cryptocurrency right now while the market cap is going down from 2.6 trillion to 1.2 trillion? Crypto as a whole lost $1.4 trillion in 2 days. $1.4 trillion in 2 days. What is that? That is a blow off top. Okay? Could we potentially find support at our previous all-time high on crypto market cap of $685 billion in market cap? 100% we could. What does that mean from the 1.56 trillion we're at right now? It means we're about to lose $900 billion in value. Okay? Again, maybe it doesn't go that low. Multiple red histograms in a row. Bearish divergence on our weekly indicator. Exiting the bullish control zone. Crypto market cap looks terrible. We just flipped over the parabolic SAR to bearish for the first time since our initial bull run started, and we got these 5-6 weeks here, which was at the head and shoulders hard sell signal, which went from $400 billion in market cap down to $298 billion. So we lost $100 billion here when we topped out, and here we have already lost $1 trillion. So we've lost 10 times the market cap value on this sell-off already, and we're only one candle in, basically. Well, two maybe. Guys, Is crypto topping out? Did crypto top out? Maybe. Maybe. All right. XDG, the doggy. The Doji dog coin. I mean, this is like the most bullish looking crypto of any. It's sold off. Got the 821 cross. You know, I mean, it's sold off from 75 cents to 25 cents. So it lost 66% of its value, and it's still the most bullish crypto. Why is it the most bullish? It only hit the 89 on the daily. Why do I use the 89? Why do I use the 200? Why do I use all these moving averages? Because they work perfectly. The 55 exponential is the close. The 89 exponential is the wick. I mean, guys, the 821 cross is the capitulation event. The 200 exponential and simple have worked perfectly on so many charts, so many times. If Dogecoin all of a sudden sells off and hits our 200 exponential, we're talking about 15 cents. 200 simple, we're talking about 10 cents. Y'all ready for this? There's like no support on Dogecoin anywhere. So if this thing starts to capitulate and sell back off and do what it's done every other time, let's look at every other time it's ever had a bull run. Bull run, capitulation, lower low. Bull run, capitulation, sells off the entire bull run in 2 days. It lost the entire bull run from 2,000s. Oh my, I don't even know what this is. What is that? 2/10 of a penny? 200ths of a, I don't even know. I can't deal with these ridiculous numbers. They're either too low or too high for me to functionally deal with. You know, let's look at what this is. Okay. Oh, look, Dogecoin went on a parabolic run. Up 158%, down 156%. I mean, obviously not. Down 99% of the run. So, you know, at which point in time, it basically like came back down and, you know, put in slightly higher lows. So is it possible that doggy Dogecoin is going to just capitulate back down here and we're going to see it again at, I mean, let's be conservative, guys. Let's be realistic here. Is it possible Dogecoin goes to a penny? I wouldn't put it past Doge. Wouldn't put it past Doge. I mean, it only takes 2 guys to sell. Like 2 people own all the Dogecoin, and then everybody else is just like riding on their coattails. So, which is probably why it's staying strong, because those 2 people just aren't selling, and then all the idiots all over the world are just like, I love Dogecoin. It's the future. Shiba Inu. Realistically, though, still above the 8 moving average. 1 weekly red histogram, potentially about to get the cross to the downside here. You know, never even got, this is wild. On the weekly, Dogecoin never even made it into the bullish control zone. That's absolutely ridiculous. Up 46 million%. Does not even make it to the bullish control zone. Gotta love the doggy coin. Polkadot. Sold off pretty heavy. I mean, look, let's be real here. You know, we hit our target here to the upside. Felt like maybe a couple bucks short of it. 50 bucks we made it to. Nice good spot to top out at. Lost key support. The next key support is obviously right here. We almost touched it. We got a big range we could operate with, you know, within between $18 and $40. So we'll have to see how it plays out. But, you know, let's be real here. I don't know how DOT ever made it up to $50 before the capitulation event down to $2. But let's hope it doesn't do that again. Let's hope it doesn't revisit the $3 range. Chainlink. One of the most bullish cryptos. Hit our measured moves. Got our sweet trades. Came back down to our support. Found support. Bounced. Died and capitulated through it. Where are we at now? About to delete this so I can grab this. Where are we at now? We're right at that support. So, you know, compared to the one we just looked at, Link is less bullish or more bearish. So again, if we get the breakdown from here, we can take the measure move, you know, could potentially take us down low. I mean, back down to like that $15 range. But in all reality, all these things are going to do, this is going to bounce back up to 35 bucks. Everybody's going to sell into it. It's going to oscillate around here. It's going to have a failed rally back up. It's going to capitulate. Let's be real. We know what's going to happen. Cardano beads. Cardano. ADA. You know, sold back down to 200 exponential almost perfectly. We got the hard sell signal. Exited the bullish control zone at the top. You know, I told everybody 250 on Cardano is what we were expecting. Made it to $2.46. I'm not the only one who front runs. I did not trade Cardano because it's trash, and I refuse to support Charles Hoskinson. But, I mean, look, multiple red histograms in a row, breakdown from key levels, about to get the 821 cross. We're going to come back up here to $1.70. Yeah, probably. Are people just going to sell into it? Yeah, probably. I mean, it's Cardano. What do you expect? It's garbage. XRP. Man, is XRP really going to fail to make a new all-time high? Is it going to be one of the weakest cryptos ever to live and live up to all my expectations of being straight up trash? God, I can't even imagine if you were in XRP and everything else went parabolic to new all-time highs and you just sat there patiently while everybody else just lapped you and lapped you and lapped you and lapped you. God, XRP is garbage. Topped out at lower than the 886 internal retracement, basically exactly at the 786, exactly where I said I was going to tap out, capitulated from that region. You know, where's XRP going? 60 cents. It'll be back at 60 cents soon. It found support. Look, this is Fibonacci at its best. Resistance at the 786, support at the 618, tried to bounce it. You know, obviously it's garbage. Nobody wants XRP. Perfect example of, what is this? Divergence signal. Sell by sell. Yay, at the absolute top. How often does that work? Almost every time. All right, so monthly, we have established that XRP is a total piece of shit and no one wants it. 821 has crossed. We're at the 89. This is slightly more bullish. If it comes down to the 200 exponential, it's 75 cents. Comes down to 200 simple, and our key breakout level, which was back here at 62 cents, probably gonna find support around there. But again, XRP is trash. And I'm sure, like, what's gonna happen when after XRP has its next big sell-off, there's gonna be some kind of FUD that comes out and says, the SEC finds XRP guilty of whatever. It's a security. Oh, it's the SEC's fault. I'm sure it has nothing to do with XRP being trash. Dash. I pulled this one up specifically because my boy Gregory Manarino has been like shilling Dash so hard lately. And I'm like, why is this dude shilling the worst cryptocurrency ever? This is worse than XRP. Dash, more like ass. At least XRP made it back up to the 786, and then this one didn't even get above the 618, and it's got a massive bearish engulfing candle. I mean, he was talking about in his videos too, buying at $300 and how I bought at $300 and it's already at $420. We're already up 50. And if Dash sells off, I'm just buying more. I bought again at $200. I'm bullish on Dash. I bought again at $150. Dash is trash. Oh, God. This thing is a piece of shit. Blew through the 200 exponential, blew through the 200 simple, and decimated everyone that's ever bought Dash. I mean, this thing sold off. Let's look at this. What is it, 75%? Oh my God, 76%. If you've ever used a stop loss in your life, you were liquidated. Dash is trash. No, I don't want to be too harsh on anybody that bought Dash because I don't want you like blaming me if you take your own life or whatever because you bought Dash. Blame Gregory Manarino. Tops out at the 618. Find some kind of support at the 382. I mean, what is this thing even going to do? What if this is the end of the bull run? What does that mean for Dash? Let's just, hypothetically speaking, just to be a dick. I'm doing this literally just to be a dick. Let's just see, hypothetically, if this was the top for Dash, what can we expect in the future for Dash? Oh God, it's about to get brutal. This thing is about to get brutal. I mean, look, how y'all gonna feel when Dash rips down to like $10? Probably not good. Probably not good. But let's just for shits and giggles, let's check out a Fibonacci extension of Dash. Let's see where Gregory Manarino's subscribers are going to be. If we hit the 1.618, let's go! $6.35 Dash. I'm going to put a buy target in there because that's where I'm buying Dash at. I'll buy Dash at $6. Oh my God. I mean, at least he says he's not a trader. I'm not a trader. I'm an investor. And I'm investing in something that looks like shit and still hasn't made new all-time highs when the entire crypto space has gone parabolic. But I don't want Dogecoin. I want Dash. I'm curious what his reasoning behind Dash is. I want to look for the most underperforming asset in the entire market space that still exists that hasn't gone out of business yet. And that's what I'm going to get bullish on. Oh my God. Dash is trash. Basic attention token sold off to the, okay, I'm gonna turn off this really quick. Could not get up to that $2, guys. I really thought it was gonna get there, but we put in the second lower high right here and saw these rejection wicks. It was very clear, obviously. 821 cross the downside, breakdown obviously from the 81. See how perfect these moving averages are? They are just absolutely, but look at that 89 exponential holding up the price. Look at that 377. Look at that moving average that no one even uses, that no one's ever even heard of. And let's look at that wick. That wick straight to the 377. 57 cents. Bat-a-tat-tat getting wrecked. Wow. Wow. 65%. I guess that's not really that much. Bounced to 377 perfectly, rejected off the 200 exponential. I think this is going to underperform. I think this thing is going to I think it's going to be really weak. I don't think we're going to get back above $1, guys. Hit him with the bat wing. Riot blockchain. But crypto trend trader, Bitcoin capitulated. Why isn't Riot selling off? It's just hanging out at its lows. Well, because it's already dead. It already sold off 75% of its value. There's nothing left. It can't sell off anymore. It can't go lower. I'm already low. I mean, look, it's barely hanging on to the 200 simple moving average at this point in time. So 18.55, $15. Do we get a bounce from here? I don't know, man. I think that for this thing to start moving back to upside, I think Bitcoin's got to start making new all-time highs. So, God, this is going to get wrecked. If this bull market is over, this is going to get wrecked them, damn near killed them. Already down to the 236, so it looks like it's already topped out. In all reality, 382 is like 1175. 0.5 is 651. The 618 is $3.51. Let's check out old Michael Saylor. Old Mikey Saylor came out. He bought some more Bitcoin. He bought it 45,000, dropping a couple more million on some biddies. 45,000, that's a good buy. 45,000, that's a strong buy. Unless we're at 38,000 now. And the dude went from $10,000 average entry and averaged up into the bull run up to like $36,000 and then made a purchase at $45,000. So let's look at MicroStrategy. MicroStrategy is now officially upside down on their Bitcoin position. He's upside down. Upside down. Michael Saylor, the crypto Jesus, the oracle of crypto, is now upside down on his Bitcoin position. What a fucking moron. And that's why you don't get greedy as things go parabolic and put exponentially more money into them as they go to higher levels. MicroStrategy is trash. It's still extremely overvalued. As far as I'm concerned, MicroStrategy is still going lower. I mean, again, it's not selling off now because it's already capitulated. The thing is already down from... It's down 67% already. And just hanging around. I mean, God, this thing sucks. Fake ETFs never do well. Look at... God. I wouldn't be surprised to see this bad boy at $250 real soon. I mean, at some point in time, it's got to bottom out because they own actual Bitcoin. But it's showing no strength, and it's just getting crushed. Below 200 exponential and simple, flat curve, trash. Trash. Oh, and look at the Coinbase chart. Doing exactly what we said. All right, so what was our first target? 2.618. Nailed it. Not getting bullish. Remember why? Because Coinbase is trash. And it was down again during the capitulation event. That's weird. It's almost like they meant it. You think after all the billions and billions of dollars they made that they would be able to keep their exchange up, during volatility. I guess not. Unless they don't want to. So what was our next target? The 3.618. Oh my God, we nailed it again. And then what was our final target for the potential capitulation event for Coinbase? Oh, look, the 4.236. Nailed it again. $200. I mean, did we bottom out yet? Yeah, we probably did. This is probably the bottom. But are we showing any strength? Or are we just seeing red histograms? Are we still crossed to the downside? Is Coinbase trash? I mean, I can't speak for the exchange. My experience, yes, it's trash. The chart is definitely trash. And everybody that ever bought Coinbase since they did their direct listing is massively upside down in their position. I mean, even from what they do, they IPO'd or direct listing at 380 is where it came out. So they're only down 41% right now. That's not that bad. It's not that bad. But somebody bought the top. So depending on how you look at it, it's only down like 50%. It's not that bad. It's not that bad. All right. We rocked them and we rolled them. Right at 2 hours? How'd we do? Oh my God. 2 hours and 37 minutes. I spent too long fudding crypto. All right. So I'm going to jump over into comments and I'm going to get out of here because that's plenty of technical analysis. And I hope nobody that actually watches my channel is upset by the way I made fun of everything today, but can't help but have a little fun with it. I mean, it's not like we didn't see this coming. Let's be real. So let's see. Bubblies, Dice Never Lies says, where are you going, Erp? You're going nowhere. Yes. Where are you going? Nowhere. And Paris Blue said XRP is following Bitcoin. It's that simple. Okay, it's not that simple. If XRP was following Bitcoin, it would have sometime in the bull run put in a new all-time high. Bitcoin put in a new all-time high. XRP did not. XRP is trash. How is something that hasn't put in an all-time high following Bitcoin? I mean, if you mean they're correlated because they're both cryptocurrencies, it is definitely correlated to Bitcoin. But if you're saying that XRP and Bitcoin are doing the same thing, Bitcoin put in an all-time high, XRP did not. Therefore, Bitcoin is good, XRP is garbage. Right? I mean, I don't understand the confusion here. The same way Dash is trash. Dash did not even put in an all-time high. Everything else, well, the majority of cryptos put in an all-time high. Dash did not. Garbage. Majority of cryptos put in an all-time high. XRP did not. XRP is, say it with me now, garbage. 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 XRP is, you say it now. I'm going to assume you said it. All right, so I guess that's it for me today, guys. Sorry if I hurt your feelings, Paris Blue, but XRP is definitely trash, and it is, I mean, it's correlated to Bitcoin because it's a crypto, obviously, but it is definitely not following Bitcoin because it did not put in an all-time high. Anything that did not put in an all-time high in this entire bull run that crypto has went on, where people have literally become millionaires and 100 and 1000x'd their investments and absolutely crushed it, and XRP still hasn't put in an all-time high, could probably say that it's garbage. So, and it's definitely not following Bitcoin. It is correlated to Bitcoin because they're both cryptos, but it's not following it. They might follow it to the downside at an exponential rate, but it's not following it when it's bullish, which is what you would expect for something that's in a space that's putting in all-time highs across the board and going absolutely exponential. Like, why did new people not come in and buy XRP? If XRP was actually good, this whole bull run, there was not enough people investing in XRP to put it to a new high. What does that mean? It had lower capital deployed on it now than before. So what does that mean? It was trash. It means it's a dying project. It means there was people who liked it before and put money into it last bull run, and now there's still people in the cult that are drinking the Kool-Aid but not putting as much money into it. So that means that it's less popular. So Bitcoin is like prom queen, Dogecoin is prom king, and XRP is the dude who graduated like 10 years ago smoking pot in the high school parking lot. Yeah, XRP is garbage. So anyway, that's it for today, guys. Crypto Trend Trader with your technical analysis, our midweek Wednesday market update. Remember, though, before we get out of here, something very important I want to share with you guys. This is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. And when Critty calls the top, the market listens. And when Critty calls the bottom, there's no one listening because y'all forgot about that crypto when XRP was down there at a penny. When Bitcoin was at 3,000, none of y'all knew my name. When, what else? When Ethereum was at $85, when Litecoin was at 20 bucks, and Crypto Trend Trader was in there buying, nobody was even talking about crypto. Cryptocurrency was dead, and everybody forgot about it. And there was only one man standing there at the bottom, scooping it all up one hand at a time. And that's Crypto Trend Trader. And if you didn't find me then, you know my name now, so don't forget it. You better tell your friends, tell your kids, tell your wife, tell your mother. Oh, and for the record, another way you can know that the top is in is when people start saying how to buy cryptocurrencies and making videos. How to buy any cryptocurrency. My boy Neil McCoy Ward with the how to buy any crypto at the absolute top. Oh, Neil. Oh, man. They can't all be winners, Neil. But look, for real, I'm out of here. Take your garbage on home. Take your XRP and throw it in the trash with your Dash coin. Crypto Trend Trader. And I'm out of here. I'll see you guys Friday for the market close. 3:30 to 5:30, 4:30 probably. I'll do that one short. Maybe not, though. We'll see. I'm going to see how the next couple days go. And we'll see. But regardless, 100%, I'll see you guys on Sunday evening. For the 8 to 10 or 8 to 11 live stream. So everybody have a good night. Thanks for tuning in. Appreciate y'all. Appreciate the love. Like, subscribes. Make sure you do all that. Make sure you tell your friends. Make sure you share it on social media. Make sure you listen to your heart and not me, because it's not financial advice. I'm not telling you what to do. I'm telling you what I do. Crypto Trend Trader, and I'm out of here.